Hello, very good evening, everyone. Welcome back to our workshop, TA workshop, second series. Okay, I'm Ying here. Today I have Xiao with me again. Okay, so we will be going through something slightly different from last week. Okay, last week we went through basically, wait, let me give you the series content first. Okay, so last week, right, what we went through was the introduction to basics of technical analysis. Okay, so this week we will touch on some basic indicators. Okay, when I say basic indicators, right, okay, it's not like okay, the advanced and basic indicators basically is it's just different indicators that we will be looking at. Okay, we'll be sharing. The advanced is not that advanced, it's just basically like oscillators. Okay, basically like relative strength index, MACD, right, the momentum, the indicators lah, basically. Okay, so it's not like advanced like Ichimoku cloud. Okay, that one there's a lot more things into it. Okay, so indicators basically they will have either they take the data from volume, they take from price, or they take from time series, or take from momentum, stuff like that. Okay, but basically we will be looking more into volume indicators, okay, and also price indicators. Okay, later we will explain slightly more into it. Okay, then next week we will be talking about advanced indicators. Then after that, we will end this whole workshop, this whole series with trading psychology. Okay, this week, yeah, summary of last week. Okay, what are indicators, basic indicators? Then we will end off with Q&A. Okay, so if you have any questions later along the way, you can just put it in the Q&A section. We will go through as and when lah. Okay, those that are related to what we are already talking about, then we will share. Otherwise, we will share at the end of it. Okay, then indicators later, we will also jump into the live charts to show you examples and also how you can basically how you use it. Okay. Okay, the summary of week one, okay, last week. Okay, I just want to recap everyone. Okay, so what we did was understanding TA. Okay, the simplest form. Okay, what is TA, right? Then we talk about trend, market cycles, support and resistance, and recognizing chart patterns using candlesticks. All right, so I hope everyone still roughly remembers what happened, what's happening last week. Okay, later we will share the link to our YouTube channel for the recording. Okay, so I mean you can watch it when you are free. Okay, basically last week, whatever we shared last week, it will be the fundamental, right? Basically your foundation, okay, for TA moving forward. Okay, because everything will still boils down to the trend, the market cycles, then how you find your levels using support and resistance. Okay, yeah. So with that, I think we can start our webinar proper. Okay, I will hand the time over to Xiong. Thank you.
All right, hey guys, it's been a busy week. So sorry for the delays for those who are actually looking out for our week one YouTube link lah. So we actually got it up just this week. So if you are interested or still interested what we went through last week, go to YouTube, jump into PhillipCapital YouTube channel, and then right there you will see whatever we went through last week. So okay, let us touch on what are indicators. So indicators typically is there to actually help you, identify certain trends that it may be stocks, it may be futures, your CFD, forex, to identify a certain trend to tell you like is it overbought, undersold. So those are indicators lah, and you must know that indicators are usually lagging indicators. What does it mean by lagging? So usually is it will identify the pattern, so the price action first, then the indicator will actually come up. So that's why we refer them as like lagging indicators. So they are not actually telling you, they're not forecasting it like, oh, it's gonna happen like that, but it gives you a certain, certain indication that how the price is gonna move. So okay, let us jump right into the indicators first. First we have, okay, the basic indicators will be volume, exponential, simple, moving averages. I believe these are all very, very simple indicators. We have average, true range, and then followed by others. So I understand that most of you requested a lot of different indicators from our feedback in the week one. So we are going to talk about it as well. But some of the indicators will actually be touched on next week itself. So let us go through the first few indicators. So volume, what are volume and how do we actually use them? So basically volume tells you how many shares are traded or exchanged on that day itself. So you look at the chart below. Later I'll zoom it in, but if you okay, let us touch on the volume first. Okay, so this is a volume indicator. Basically, you'll see how many movement of the shares, can be indices or traded lah, basically. So this is the volume. So what is volume? Or how volume tells you information. So basically, volume with higher volume, right, there will be more price action. So usually we will want to trade in those items or stocks that has higher volume lah. If not, no volume, lesser price action, it can move. It won't move a lot basically. Like let's say we're talking about Tesla or Microsoft. Microsoft isn't really very a lot of volume, but let's talk about Tesla. Pre-market we see a lot of volume coming in, so you see the price moving a lot. It's very volatile. So that's what volume will result into lah. But one thing I want to point out, volume. A lot of people got this like a misunderstanding of volume. You see the red and green candle chart. Sorry, the candlestick below. It's not actually telling you, oh wow, today a lot of seller. Wow, green means a lot of buyer. No, it doesn't tell you like that. But I think most of us understand volume as when we look at the green and red, like, hey, why green, why red? Basically, it's just telling you that the market is closed on a lower or closed higher. That's why it's green or red. So this is just something I want to point out because I notice a lot of those people who are taking indicators such as volume misunderstand. I personally, when I first started using volume, I also misunderstood. I always think like, wow, red means a lot of seller, green means a lot of buyer. Then you see green, then suddenly, today I buy at the highest. Then tomorrow want to sell, then wow, like rugi lah. Okay, so I'm making losses on my trade. So just one so I think for you guys to take note lah on this. Yeah, Ying, anything to touch on?
Yeah, I want to add on from what Xiong had already shared. Okay, you mentioned the red and green candles, right? Yes, absolutely correct. You see, trading itself is a zero-sum game already. Okay, so when there's one buy, there's one sell, one buy, right? So the volume itself, you cannot just take it as it's red color, then it's more sellers. Okay, it doesn't matter because it's a matching. Okay, you will always match the orders. Okay, then you see the last point when I talk about you can think of volume as acceleration. Okay, what do I mean by that? I just give you a simple way, an easier way to really think of volume. Okay, how it works. So volume, right, is like acceleration. Okay, if you are on a straight road, okay, you don't step the pedal, you constant acceleration. Okay, technically the car will still move. Okay, but then once you hit a upslope, like there's a slope, right, the car needs to move towards, right, you need to increase your acceleration for the car to continue at the same speed up the slope, right? So it's the same thing. If you, in the market itself, if you think of it, right, volume, if every day you have a constant volume, right, then price just gets stuck around the same area. Basically, you can think of it like the car is moving straight, okay, on the road. So once they hit into a support and resistance, okay, or generally any levels, right, can be major support resistance or minor support resistance. So once they hit into a resistance, it's like a ceiling, okay, it's like an upslope. For the price to continue moving out of that resistance level, they will need to increase their acceleration, meaning to say you need volume to increase, okay, to start breaking this resistance, right? If you have a ceiling, you need to break the ceiling, you need to keep whacking it until it breaks, right? So in this example that I'm trying, how do I say it? Yeah, okay, basically it's like a simpler way to look at it is you can think of volume as acceleration. Okay, when the car starts moving towards the upslope, which is a support or resistance, you need volume to try pushing it out of it. Okay, to try pushing out of it okay, so so that's my understanding of it for volume. Okay, so later, of course, using volume, right, there's a lot many other ways to really look at it as well. Okay, you can spot for the outliers volume, meaning to say that day itself you have a lot more volume for the price. Okay, wait, let me look at the chart. Okay, for example, this one, I'm not sure if you can see clearly. You just look at the volume across. The volume is the bottom part of the screen. Okay, You just look across, you will see this middle, right in the middle, right? There's this volume that is way higher than every other volume, right? Then of course we can pinpoint that okay, on this day itself there's a lot of buys, there's a lot of sells, basically they are just matching each other. On this day the volume is high. Okay, so what does it tells us? Okay, later with the live chart I will show you how you can make use of all these outlier volume, right, to pinpoint levels as well. Okay, then also with volume, another way to look at it is whether there's a convergence. Okay, meaning to say when price is moving higher, okay, is the volume following the price, okay, across the days, right? Because you don't want a case where let's say you are long on, for example, this one Nasdaq, right? You are long on Nasdaq, but when the price is moving higher, the volume is actually decreasing. Okay, so you have a divergence. When you have a divergence, means this whole up move, right, is actually not supported by volume. Okay, we don't need to. I mean, you don't need to think of it whether it's a buy volume or sell volume, because, like I say, it's a zero sum game, right? So even if the price is moving higher and you have lower volume throughout the days, the next few days, right? Also meaning to say there's lesser interest. Okay, then if you think of it again, if price is going higher and people view it as bullish, shouldn't the volume, I mean, shouldn't people start buying more because the price is moving higher? Okay, the hype will be there for people to start buying, right? But if the volume is decreasing, right, meaning to say there's no interest in it, means that this movement of this up move, right, might not be the real intended direction, right? Okay, so later we will also share more. Okay, I think with this chart alone, you cannot really tell what I mean, it's quite tough to illustrate what I'm trying to explain now. Okay, but we will talk about it more in depth when we look at the charts later. Okay, Xiao.
Yep. Okay. So anyway, guys, feel free to ask us questions if you all don't understand anything, so that we can also understand where you guys are looking at. And then at the end of the session, near the end, we will be going through charts lah. Then we will apply all whatever we learned from last week until this week and show you guys how we look at the different levels and the different entry points maybe. Yeah. So feel free to ask us questions. We are curious lah. Anyway, so moving on to the moving average. Moving averages, there are different moving average, and usually, this is the first few things you learn in indicators lah. People tell you, hey, moving average like 50 days, 20 days. You're like, hey, what's that? So basically, it's gonna tell you basically it's a identification of the trend lah, as it's written right here. Why we use 20 days or 30 days is telling you the average price for that period. So we have the different levels. So I think one thing is considered is also viewed as a dynamic support and resistance level. What does that mean? So let us take a look at the next slide. So you see, there's two different moving averages here. It should be 50 and 200 lah. So usually the longer days will be more constant, and then you see the lesser days will actually move according nearer to the chart pattern, I would say. So this acts as a form of support resistance for people who use these indicators usually. So like let's say for example, it broke the 50 MA50 level. So is it to them it may be a buy-in price, or to others it may be like, oh okay, it's bearish, so like it broke the support level, so they're gonna sell or buy in. So this is something people use for their indicators lah. Yeah, I'll hand over to Ying. Anything to add?
Okay, for EMA, okay. See on chat, right? Someone asking should use SMA or EMA. Okay, this one later we will go through also. Okay, later slides. Okay, but I just want to touch on for moving average, right? If you are trading, if you are doing intraday or swing, or you are investing, right, like long term, right, the days you use will be very different. Okay, it's not that you can fit intraday MAs, right, into a long term. Okay, it won't work. Okay, that one I can frankly tell you it won't work. So later we will share the days, like the ideal. Okay, I wouldn't say ideal lah. I mean, along the way you might have your ways to tweak tweak those days, right? Those duration. Okay, but I will just give you the more commonly used one, and also what I think works well, lah. Okay, after all the back testing and everything. Okay, so why we mentioned that MAs are dynamic as support and resistance, okay? Because the most common way of really trading moving averages, right? If you eliminate the death cross and golden cross, right? Basically, you are just waiting for price to tap back into the moving average when they are moving, because basically they are showing a trend, right? So once the price starts to retrace, start to hold at the level of the moving average, you will look for the movement of the direction of the moving average. Okay, but one thing to take note is moving averages are lagging. Okay, so you will only know when when the candle is closed. Okay, so without the close, right, there's no way that you can really tell. That's why you need other more confluence on your moving averages. Other confluence on your chart itself. Okay, it can be just simple support and resistance, or even indicators. Okay, with that, right, then you can find confluence to know whether it is a good time for you to find a trigger at least. Okay, then yeah, so I think this one is just the moving average. Okay, I pass back to Xiong to share on EMA and SMA. Then after that, we will go more in depth into what are the moving averages to really use.
All right. So we're talking about EMA now, right? Let us. Oh, sorry. This is the second part of the moving averages. Yeah. So like what we mentioned earlier, if it breaks below and above, so these are different signs lah. Basically for moving averages. And then people will use very fancy one. They put all 20, 50, 200. You don't even know what you want to see, right? But it does happen lah. Like the people just put, then they have different support levels. Like break, break, break. So it's always good to know what you're comfortable with the different MAs. So yeah, I think the short term and long term is right here lah. Yeah, anything you have to touch on or different charts?
Okay, the moving averages, right? Okay, you just look at these slides lah. Okay, basically I think is basically what moving averages are all about. Okay, but what we're going to share more on will be exponential and simple. Okay, so short term, long term, you see like here. Okay, of course, short term, right? Like you see, now is 18, 13, 21. Okay, why the dates? Why the duration? The number is so specific. Okay, for example, you know that every week, right, we have 5 trading days, right? So why the 5 trading days, right? What we are looking out at is during these 5 days, okay, the previous 5 days, how are they running? So basically, you have a week. For past week, what's the trend is moving like? Okay, this is for short term. Okay, I just share the short term first. So 8 days, why 8 days? Okay, 5 days already. You have Monday, Tuesday, Wednesday. So you have 8 days. So you have the previous 8 days of candles to show you your MA. So with that, right, you actually know throughout the week how the price is actually moving on average. Okay, are they moving on an uptrend? Are they sideways, or are they a downtrend? Okay, moving averages usually work better during trending markets. Okay, because sideways you basically have the MA just like a wave. You will get trapped a lot in the range itself, the sideways movement. Okay, so it works way better during trending markets. Okay, so basically the number here, right, the duration of how the length, basically the length of the MA, right, is basically based on the days where, like, how much more you want to look at, okay, like the past week trend, or 2 week trend, or the monthly trend, like 21 MAs. Okay, 21 MAs is basically you have 1 month of trading already, right? So you will know, okay, with that MA there, you know that, okay, this is your monthly trend, your most recent monthly trend. Okay, so yeah, that's how, that's the more commonly used length that people will put in. Okay, then also if you slowly notice, if you are more into US markets and all the macros of US, right, you'll notice that, okay, first Friday of every month you will have non-farm payroll, right? The payroll record, payroll data from US. Okay, then Wednesday usually you have your CPI, your FOMC and stuff like that. That's why also that's why shorter term you will always take note of the Wednesday also. Okay, also I don't know. I've been trading for quite a while, but I don't know if it's a myth or not lah. Okay, I just observe it, not just observe it, but I just look at the charts, right? But if you slowly notice, right, usually the Wednesday or Thursday, right, will be a day of reversal in a sense, not reverse the whole thing, it's not, it's just throughout the week itself. Maybe they have a very impulse down move. Okay, the Wednesday usually might be the day, Wednesday or Thursday might be the day of the reversal itself. Okay, so also why your moving averages are always taking note of all these data that they are printing. Okay, yeah lah. So this one, you see, look at the chart. Okay, basically you have 4 MAs lah. Okay, the days look like it's 200 and the shorter time frame one. Okay, as in shorter term, right? So I also suggest that you don't put too many moving averages. Okay, you know, later you look at the chart. Okay, wow, so many lines, you don't know which one to pinpoint. Of course, the easiest way is the longer period, right? The longer length MA are more of higher importance. Okay, but also it boils down to what kind of trader you are, basically, right? But if you have a lot of lines like this, you look, this is for illustration, right? When price start to dip below your shorter term MA, right? You don't know whether to short or long, or because it's still holding above your longer term, stuff like that. You make yourself very confused, in a sense. Okay. So this is just for illustration. Okay, then moving forward, now we got simple moving average. Okay, so this one I will share lah. Okay, simple moving average is basically the easiest way. Okay, why easy? Because you divide accordingly. Okay, so for example, you using 50 SMA, 50 simple moving averages. Okay, the line itself that you see on this chart, okay, this chart on your bottom right, this line is basically based on the previous 50 time series. Okay, so just now got a question. Okay, the question is, should use SMA or EMA? What is the difference? Okay, firstly, the difference is how they calculate the formula. Okay, but other than that, right, I would say the more common one is to use EMA. Reason being, EMA uses more recent data. Basically, they have a heavier weightage on the recent data, right? So you eliminate a lot of noise from back then, okay, but then they will still give you this average of, maybe let's say you are using a 50 exponential moving average. All right, so they will still use the 50 average, but it's just that you have more weightage for those that are nearer the closer dates. Okay, so with that, right, you eliminate a lot of noise from back then, maybe from earnings release, from data, all these catalysts that move price quite drastically, right? You eliminate all this from back then, and you're just looking at the period now. Okay, so EMA, wait, the next slide should be talking about, okay, wait, never mind. This one for illustration, SMA, okay? You look at we are going to show on the same chart, okay? So basically, this is SMA line, okay? So for exponential moving average, right? Yeah, like I explained, it's the same. It's just that you are using more weightage on data that are more current. Okay, so with that, you eliminate all the noise that is, from basically from catalysts, it's just earnings, data, market data, anything like that. Okay, but if you notice, you see, I just go forward one first. Okay, this is EMA line. Okay, you have movement uptrend, then now sideways. Okay, then you look at SMA, uptrend, sideways. Basically, it's almost the same, almost. Okay, so that's why trading market, you don't really see much difference in SMA or EMA. You will see a lot when you are on a shorter time frame or during a sideways movement. Okay, Xiong, anything?
Yeah, I think what Ying said was about everything. EMA will have higher weightage. So usually people would tend to choose EMA instead of SMA. But this indicator suits individual better. What we probably want to advise or say is that try not to put too many moving averages, because it's not like you're gonna convince yourself, then you start confusing yourself. Okay, so don't use too many, but I think moving averages itself tends to give you a picture of how the average of the price movement is. So it's a good indicator to use, but then of course this will suit individual moving forward. Okay, back to you, Ying. Okay, okay, let me talk slightly more. So sorry, let me. Okay, yeah, okay, we will touch about on average true range first. Understand that most of you got questions. Feel free to come in. We got the Q&A session at the back. So we were going to answer them as we move along. Okay, average true range. This is truthfully to tell you, I don't really use this, but this, once I learned this, I thought it was pretty useful, and it's good to share. Basically, average true range is basically the average price of the investment over the period. So what you can see is right, the mini chart below, but later next slide, it will be a bigger chart. On the mini chart below, you can see that it gives you this range. Basically, tell you that the price movement for that day itself. So let's say you use what is ATR? Basically, ATR tells you the price movement of that day, and then what you can use it to do is actually to set your stop, your take profit and your stop limit. So you basically take the current market price, and then a good rule of thumb is to multiply ATR by 2. So let's say if it's 200, and then you have an ATR of 15. So you multiply by 2, and then you set the stop loss on maybe 170. So that's how it's usually calculated. Ying, anything to?
Okay, I just want to add for ATR, right? Yeah, it's like what Xiao mentioned, and also on our slides. Okay, it's basically what's the range, average range lah, okay, of the price movement a day. Okay, on average. Okay, so like you see now, setting lower than 14. So basically you have like 3 weeks of data, right? Okay, so if you make any setting lower, okay, you will be more sensitive. Why? Because you are at a closer period. Okay, you are more, I mean, it's the more current area of data that you're looking at. So ATR usually what you can use it for, right, is it's like your take profit, where you want to take profit, where you want to put your stop loss. Okay, but it's not dead. This ATR is not dead. It's not like, for example, let me just show you. Okay, you see this ATR over here on the chart, 15.43. Okay, so let's say, well, you watch our webinar already, then you say, okay, 2 times multiply the ATR by 2. Okay, so you're going to set your SL at 30.86. Okay, 30.86 doesn't mean it's dead at 30.86. Okay, this is just a range to tell you that, okay, throughout these 14 days, previous 14 days, what's the average price per day? Okay, so with a 2 ATR, you protect yourself, at least unless there's a catalyst or anything that creates the volatility for the price to move 2 days on average, you will get the SL, you will hit the SL or TP. Okay, but this 30.86 over here, number times 2, okay, if it just nice happen, like for example, you see this Adobe, this example, 590.34, okay, you minus 30.86, right, is around like what, 550-ish. So you are basically below this previous resistance level. Okay, but of course, if you see on the left side, you see this small candle, right, then basically your SL is confirmed have to hide behind the candle. Don't put in the middle of the candle. Okay, or middle of the range. That's even worse, right? So your SL or TP must always make sense. It's not that, oh, because ATR tell me times 2 is this number, I'm going to stick to that. It's not like this. Okay, you still have to find the level where they broke away from, then you find a level where the candles are sitting on, then you put your SL below, or you put your TP below, TP higher. Okay, so later we will show more examples because with this I cannot really show you the line or anything. Okay, it's just this chart illustration over here. Okay, so ATR in short is basically useful for you to find your price range, your average price range a day. Okay, then also something more interesting is with ATR, right, if those interested in doing algo, okay, you want to do some EA, right? EA is expert advisor, like some bots to help you trade, right? You can use ATR to tell your bot, to tell your bot where to put your SL. Okay, because bots usually is you need to use a lot more data if you want to let the bot draw your support and resistance. Okay, then that will be a problem, right? So those that are interested in coding you ATR, you can just throw it in. Your bot will help you go and pinpoint what's the ATR of the day. Then you will be able to basically just use it to set your auto TP and SL. Okay. So wait, something I saw a question on 9 EMA, is it 9 candles? By one of okay, yes, correct. Okay, 9 EMAs okay. So for example, 9 EMAs, 5 EMA, 100 EMA is basically how many candles before, okay, the previous candles. Okay, so yes, you are right. 9 EMA is 9 candles. So basically 9 days, or let's say you use a lower time frame, you're using hourly chart. So that will be 9 hours of candles. Okay, or like 30 minutes, then that will give you like what 4.5 hours. Okay, stuff like that. So the number that you're going to put for your length is the the number that you put for the length is basically the number of candles. Okay. Then also on chat, there's one, what about WMA? WMA, Ivan, is it you talking about weighted moving average, is it? Yeah, if WMA, right, if I'm not wrong, right, WMA and WMA is a variant of this simple basically SMA and EMA. Okay, the only difference I think is they will have some smoothing, what do we call it? The smoothing length, okay. Smoothing length is basically what in indicators, right? What they use to basically eliminate noise. Okay, but the numbers for the smoothing, right? I cannot give it to you lah. Usually is 2, okay, but there's some formula to it. Is I think is n bracket 1 plus something one lah. Okay, basically is some formula that you can count your smoothing. Okay, but smoothing is how they use some formula to smooth out the MA so that it's not so erratic. Okay, yeah, if you are asking about weighted moving average, okay, otherwise WMA I don't know what other WMA are there. Okay, then okay, then with these actually basic indicators, right? That's all we want to share. Okay, because say real okay. I look through, I mean, okay lah, Bollinger Band, I'm not sure if you're here before. Okay, stochastic should have oscillators. Okay, all these are not basic indicators. Okay, like I say, sorry, basic indicators or advanced indicators, right? It's just I mean, just the way I put it. Okay, basic, I just take it as like volume, you use price, then it's just one line, it's plot for you. You can see your trend, you can see everything you want to see. Okay, all these others, right, like Bollinger Band, okay, it's the same as a moving average. It's just that they have an envelope. Okay, the envelope meaning to say also same thing. It's like if you put triple EMA in, okay, they will just run accordingly, and the top and the bottom will basically be your envelope. Okay, but Bollinger Band slightly different is they will take into account volatility as well. Okay, then all these I won't go in depth lah. Okay, say real, I only know the brief, the surface area kind of thing. It's like the iceberg. Okay, not iceberg, it's just the ice. Basically, I only know the tip. Okay, I see before, I roughly use before, but that's all I can tell you. Okay, you want to ask me to tell you about like how to use, okay, I can share with you if you all want to know. Okay, but if you want me to explain more in depth into this one you need to look at what the kind, I cannot. Okay, stochastic oscillators, same thing. It's like momentum. Okay, they plot later. Okay, next week we will talk about relative strength index. Then we will talk about MACD as well. Okay, so stochastic oscillator is basically part of this RSI, MACD, and stochastic. Every time you will hear these three. Okay, it's basically the momentum and price oscillators. So basically, it's either bounded or unbounded only. Bounded meaning to say it's like for example RSI. You have 100 and 0. Okay, anything above 30, anything below 30 is oversold. Anything above 70 is overbought. Okay, stuff like that. So stochastic has its own way of calculating the data itself. Ichimoku cloud, this one very complicated. Okay, this one I want to say, I also don't know how to say. Okay, but Ichimoku cloud, you see a lot of data. Later I will just show you Ichimoku cloud. Okay, I mean, I know of people that really uses it well. Okay, because this Ichimoku cloud, right, how they come up with this thing. Okay, like I say, you see EMA use price, right? Volume use volume. So only got one. There's only one data that they are using for the indicator. Ichimoku cloud uses price, volume, momentum, volatility, a lot of things. That's why you will see a lot of lines and the cloud coming out. Okay, but this one I must be very frank. Okay, that's all I know about it. Okay, I know that you are looking out for death cross, golden cross within the cloud itself. But that's all I have for you for Ichimoku. Okay, harmonic pattern. Okay, on feedback. Harmonic patterns. Okay, on harmonic pattern, right? Last week I saw feedback that people are asking for Elliott waves, Winkoff theory, all these, right? Okay, I not going to. I mean, we don't have all this information. Okay, it's not going to be in our webinar sadly. Okay, but basically, the Winkoff is market cycles. Okay, I just summarize everything and put it in more like smaller bits for you lah. Okay, but the Elliott wave patterns okay, that one. later we show on chart lah. Okay, I don't have the slides or webinar for it. Okay, we are not we never prep for this Elliott wave. Okay, so if really more people want, right? Okay, then we will talk about it. Otherwise, right, it's basically looking for higher high, higher low, higher high, higher low. But there's a lot more rules to how you look at the whole. Let's say for a bullish leg, right? They are running. You have a lot more rules to look out for to understand whether this wave is over or is at the start of it. Okay, so there's a lot of information for that. So I'm not sure if in one webinar, right, we can really squeeze a lot more things into it. Victor, yes, Victor. Zain is using Ichimoku lah. I saw it on his charts lah. He got a lot of indicators and everything. Okay, then, I mean, good lah. I mean, if you know how to use that, it's good. Okay, but with that being said, right, personally, you also know I use clean chart only. Okay, so when it comes to indicators wise, I only can give you surface of what I know and maybe what I try to do before. But that's all to it. Okay, so if you want me to come up with an education for it, that one will take a while. I need to go and prep also, right? I need to back test. I don't want to give you just for the sake of giving also. Okay, so the last one we have, like, okay, not we have, is more of a more, I think, common, also popular, volume profile. So what volume profile does, right, is basically the name is volume profile. Okay, profile meaning to say they give you the volume at each price level. Okay, like for example, you see the candle I just pull a chart first Okay, for example we just look at this okay, I later then I go to the live chart. For example, you have a day candle of 420 to 440. So what a volume profile does, right, is they tell you, okay, 420, what's the volume like? 430, what's the volume like? 440, what's the volume like? So basically the volume is horizontal and it will come up from the side to tell you at each price point what's the volume like, what's the volume traded. Okay, but with that, it's also not saying that, okay, you have more volume, but then it's red candle means more selling. No, it's just end of the day, it's still a zero sum game. Okay, so yeah, okay, so with this, right, I think all the indicators, not all I mean, there's a lot many others okay. If you go and read all the volume indicators, you got what William accumulation distribution, you got chunking, all these I don't know all these I don't know say real, I want to share, I also don't know how to share. Okay, I only share what I know. More in depth one I can talk more, not as in depth one I just surface. Okay, so if you all know more about it, then please share with me as well. Okay, so with this I'll look through the Q&A, then we go into the live chat. Okay. Okay, let me prep the Q&A. I let Xiong speak a bit first. Thank you.
Yeah, so before we start all this, so I just want to share, today we are sharing those simple indicators. Why so is because most of the advanced indicator that you see here under others, they are basically a mix of simple indicators. Okay, so it's like you got rose water and then you got milk, then you plus together bandung, same thing. So they take SMA, different SMA, and then you plus together, wow, Bollinger Band. So this is the logic we are getting across. So we want you to at least get the basics to understand which individual, the simple indicators first. So at least you'll understand how it works. Then subsequently you'll move on to advanced indicators. So truthfully speaking, I think I agree with Ying. Even so far, I don't really know a lot of advanced indicator. I mean, I've tried Ichimoku, doesn't really work for me, but maybe Zain, it works very well. So all these are up to personal. You guys will need to further understand what they are using. So let's say Ichimoku, you will have to read which the different waves. I think there's 5 or 6. So you need to go and understand which the lines drawn on it and what they actually mean. But usually they'll use SMA, EMA. Then once you touches that, then you will understand. Oh, so this is simple. This is average. So I think someone asked about weighted, right? I think weighted is something in between EMA and SMA. So usually, from my understanding, EMA will react slightly faster than both SMA and weighted moving average. But then again, this is up to personal. If it works for you using WMA, go ahead. Yeah, so that's for it lah. In terms of all these indicators, once again, I think if you want us to explain, I'm also not very confident to tell you that wow, Wingo event is this stochastic is gonna do this. Because personally I have tried them lah, so I'm aware they exist. But in terms of executing them using the live price action movement, it's gonna be a different ballgame. Okay, so let us jump right into the sponsors. So this is actually sponsored by Phillip Securities, PhillipCapital now. Yes, we still have promo ongoing. For those transferring from TD, you have cash rebate for options trading. And then subsequently, we have, if you guys do not have any Podiums account, I believe we still have free shares going about. So if you guys sign up and deposit, I think there is a certain amount of free shares that will be credited to your account if you do not have an account with us. So check it out. It's on Podiums under the promotion page. So next, we have our community, P3 community. So if you are using P3 now, our latest app, we have the different type of community here. We have all the different, all these are under the community group. So you guys got a question, post it inside. I believe there will be people, sharing their thoughts, sharing the market, and all we have, I think the newest is the options. So you don't see it here, but we have options community as well. So go ahead and check it out. Okay, so this is our global markets Telegram group. Once again, this is managed by our global markets team. So they'll let you know information, throughout the day, each day, whatever you all need to know. They will actually post recurring. And then of course, Ying is inside this group, the TA group. I think this group is the most popular out of them all. So feel free to join them. If you've got a question, need them to help you, please post them under this Telegram group because it's a sharing group. So you guys got any question, doubts, I think we are also learning from you guys. So feel free to put it in so that we can share our thoughts. So yes, we'll go through the Q&A right now. Yeah, over to you, Jie.
Okay, sorry, just now the others indicators, right? I forget to tell you all about FIBO, okay, Fibonacci retracement. Okay, that one will be included in next week webinar. Okay, so I think with that, okay, for now, right, let's jump to the charts. Okay, then I will go through the questions. Yeah, this is not a counter review. I mean, I will use some counters to talk about all these indicators and talk about TA, okay? But it's not going to be a counter review session, okay? So if you have that you really want me to talk about, like just give me one counter, okay? Then I will just use that counter to explain to you. Okay, hang on, let me just share the screen. Okay. Oh, so anyway, the YouTube just now we were talking about. Okay, over here, PhillipCapital YouTube. Okay, global market November webinar series. Okay, then this is a recording for last week lah. All right. So okay, okay, now we have chart already. Okay, I will just use any lah. Got anything or not? Okay, if no chart, no nothing yet, then let me just explain some of the Q&A. Okay, we have a few questions here. Okay. One question asking, many platform offer indicator volume showing bankers volume and retailers volume. How accurate is this type of chart indicators, and where and how do they get the real-time data? Okay, Ivan, I think right, this kind of indicators usually is from either the broker themselves or the FI themselves. Okay, so if the bankers volume, I think the banker is like all the big boys okay, instis okay. So when they buy, if they are buying in huge chunk, usually it's a merry deal, okay. Otherwise, right, if it's too big, more than the average 30 days volume, okay, then they will need to report as well. Okay, so the volume itself, I say real, I don't know where they come out with the bankers volume, okay, because one way is maybe what they are trying to do, the data they are looking at is when they take it as the volume that per trade, right, the volume is very huge. Okay, it's like they just assume, okay, there's some assumption that is probably not a retailer okay, but I personally I don't use. I see it before. There's all the green, yellow, red candles at the bottom one. Is it the kind of indicators? Yeah, I personally I don't use. Okay. So I'm not very sure where the data coming from. Okay, it's probably probably from somewhere that they are putting it from lah. Okay, it's just but I would assume that there's a lot more assumption in the indicators itself. Okay, because you also don't want the case where you use, let's say, okay, for example, we know that equities market, right, is a centralized market. Okay, there's exchanges that really, your buy and sell is always going through it. Okay, the volume is very accurate. Why? Because you buy and sell, the end of the day, the total volume, right, is, I mean, it's accurate lah. It's basically is exactly what they traded. Okay, but for example, if you are trading in forex, or like commodities, it's decentralized. You have so many exchanges, right? The money just keep flowing, right? The volume, maybe you don't look too much into it. Okay, because yes, the outliers will always be the outliers. Okay, but every other volume that they have, right, is not accurate at all. Okay, it's not 100% volume show. Okay, then we have one question is also on last week's webinar lah. Okay, it's basically major minor resistance support. How can we identify it? Okay, so can I just get some of you to type in chat lah, whether you all want me to revise last week's stuff. Okay, otherwise I will just reply to this Q&A slightly later already. Okay, if you all want, then you all just put 1 or Y or anything lah. Okay, just let me know whether you want me to talk about last week's stuff. Okay, otherwise today will just be solely whatever we went through, EMA, volume, ATR. Okay, then okay, can I explain the significance of one MA cutting the other MA? Okay, for MAs, right, it's like what they call it is, if you have later I was, okay, never mind, I just pull the MA out I think easier to see. I keep using my hand, you're also confused already. Okay, the last week we see Tesla already. Okay, today we go, okay lah, JP Morgan lah, JPM. Okay, just random chart okay. I remove everything. Okay, then let's throw in some indicators. Okay. Okay. So for indicators, I take it. Okay, I'm not going to share SMA. Okay, SMA, EMA, I take it is the same. Okay. To me is I mean, okay. One thing. Sorry. Now that we talk about this SMA or EMA thing. Okay. Okay. A lot of replies saying that they want revise. Okay, this one I will go through later. Okay. Okay, but now I will just share on EMA first. Okay, volume later will come. So let me just add a few more. Okay, EMA always must. One, you cannot do EMA lah. Okay, you need at least 2 lines lah. Okay, minimum. Okay, so if you are using trading view, okay, one thing you need to take note when you come to EMA, right? Let's say you select EMA already. Okay, go to your settings. Okay, this is just to share with you how to do lah. Okay, your smoothing, you see this smoothing method change to EMA. Okay, there's a lot of others got VMA, WMA, VWMA, okay lah, all these I don't know. Okay, but smoothing method use EMA. Your length you just put. Let's say you are okay, this smoothing, right? This one very tricky because they got formula one. Okay, usually when I doing like lower time frame one, okay, not lower time frame, like lower, like shorter term, right? I use my EMA, right? Usually my smoothing length I will put 2. Okay, but for long term, I'm not sure what number you should put. Okay, what you can do is never mind, I will just, since we are on this, we educate together lah. Okay, sorry, I mean, this one I need to tell you, I really don't know how to count the thing. Okay, what does, wait, no, this one, what value? Okay, this is a formula. Smoothing constant that equals 2 divide 1 plus n. Okay lah, so if you want to know your smoothing, you need to change all now. Okay, so this is the formula I put in the chat if you want to use EMA. But the smoothing you need to take note, because you don't want the case where you suddenly have your EMA flying off the thing, off the chart, then it don't make sense to you one. Okay, so this is the formula to find your smoothing. Okay, but then just take note, is just use EMA lah. Okay, so for example now we just see 2/1 plus n. My n is 9. Okay, so I got 10, so 5. Okay, 5 correct. Okay, but okay, how about this? Let's see. You see whether the trading view will change for us. Okay. They won't. This one I changed 21 EMA, but SMA is still 5, so I need to plus myself lah. So 21 plus 1, 22, 11. Okay. Okay, so enough of that. Okay, enough of all this calculation. Sorry. All right, so EMA, okay. So you have the formula, you have EMA. Let me change the color as well. Okay, the longer term, longer length EMA, right, is red color. The shorter, sorry, the longer one is blue color. The shorter one is red color. Okay, as you see here, EMA 21, EMA 9. Okay. So the question, Q&A got one question. Can explain the significance of one MA cutting the other MAs? Okay. So usually, if you have a shorter length MA cutting the longer length one, right? They call it, okay, depends on where they come. If they are going down, right? If they are going downwards, it's called a death cross. Going up is a golden cross. Okay, that's just the term. Okay. But end of the day, right, what you just need to take note is if a shorter term, shorter length EMA is cutting the longer length, okay, for example, we are seeing it over here, right? What does it tells us, right? The significance is, okay, firstly, you need to know it's lagging, right? So this cross here, this death cross that appears here, is only printed when this candle is closed. Okay, you get what I mean? Or maybe not even this candle, it's this red candle over here. So by the time when you see this death cross appear, right? I mean, just by looking at the chart, you know that they are coming down already lah. That's the fact lah. Okay, that's a matter of fact. Because you only have this cross over here when price already printed this area. Okay, then it's whether you want to catch the subsequent move downwards. But usually, the way to catch a MA, let's say they have a cross already, right? Usually you look for the cross, okay, then you find the direction to take basically. Okay, so you have this cross, you have very messy, wait. You have this cross over here already. Okay, I point an arrow, cross. You have this cross. What you want to do is you wait for price to retrace back to the level, the line that they broke, the line that broke down, okay, which will usually be your shorter term, your shorter length. Okay, so for this instance, you know that, okay, your short term is already trying to turn downwards. Okay, you have the cross, you have this death cross over there, basically telling you that it's going to be bearish, at least for now. Okay, because the past 8 days is more bearish than the past 21 days. Okay, the momentum has shifted. That's what they are trying to tell you. The price is trying to break lower. Okay, that's why you have this death cross over here. Okay, but it's not saying that you see this cross, because this cross appear, you straight the candle print here already. It's already way lower, lagging already. Okay, then you also, I mean, personally, when I used to use EMA, right, I don't trigger right at the candle when I see the cross. Okay, because you don't want a case where you see, let's say you have a cross here, we know it's cross because it's hindsight, right? I'm telling you this is already looking at this lagging data already. Okay, because you don't want a case where they are crossing, then suddenly they come back above. Like they cross a bit, then come back lah. It's like over here, you see, here you like cross but don't cross, cross but don't cross. You don't want to get trapped in a sense. Okay, so the best way to really look at it when you are looking out at EMAs, right? You wait for the death cross or the golden cross or any of these terms okay? You wait for price to go down already, wait for them to come back to the level, come back to the EMA. Okay, also why I say EMAs, right? Like all the moving averages, right? Basically, they are like dynamic support and resistance. Okay, because once price starts to trade lower than that, they will start to keep basically respecting this line itself, this EMA. Okay, but of course, the longer length EMA will hold more significance. So that's one thing that you need to think also. Okay, so it's not. I always suggest to trigger right here when they show your cross. Okay, wait for price to go down, continue, then they come back and tap into this line again. Okay, so that's the basic of using an EMA and EMA. Okay, you wait for price to go down, then they retrace back. Okay, or price to go up, then they retrace back, then you take the move from the EMA itself because you view it as a dynamic support and resistance. Okay, so with that being said, basically EMA is just like that. It's really that's all to it. Okay, but of course you have a lot more lines. I mean, okay, the lines also make a difference because what you want to understand is like, for example, just like I tell you, you have short term, right? You have 8, 13, 21. Okay, I throw one more 13 in. Okay. Oh, I cannot put too many. Sorry, I cannot put already. Okay, I don't have the trading view pro lah. Okay, you see, I want to put, they tell me maximum 2. Okay lah, then I no choice, I only can use 2 EMA. Okay, but what I'm trying to tell you is even with your EMAs, right, what you just need to take note, okay, now I just show you, for example, like we look into even longer period, okay, 50, 26. So yeah, this one I need to look at the ceiling to count the smoothing. Okay, this is a long term, okay, not long term, it's like a longer length EMA, right? Because if you see, if you are going to play swing or longer term, right? You look at the EMA over here, like I explained to you, if it's in the trending market, it's very easy to, okay, I don't, sorry, not easy is not the word, it's not the word. It's very simple to spot where you want to find, okay? But it's the same thing, it's all these are, like you wait for the cross here, right? This cross here happen, you know that this price already coming down, okay? This is a longer term one, okay? 50 is a shorter one. You don't take at the cross, okay? You wait for price to come back, you wait for price to come back, you wait for price to come back. Basically, this is it for EMA, okay? At least this is my understanding from back then when I use lah. I just wait for the price to give me a cross, okay? Then I find the rejection. Okay, same story over here. You have a cross, okay? We have a cross here. You wait for price to come back, reject the EMA, okay? Then you see, last week I tell you all the basics, right, is the fundamental, is what you really need to know. Because with EMA, then how? Where you TP? You don't know when to take profit. You can run and run and run and run and run, but yeah, they just keep rejecting. Oh, very nice. Trending, trending is confident, keep running, one. Then when you take profit, you won't know. Then you need to look for data from the back. Then when you find the data, okay, if you want to use EMA as a guide, okay, now we just talking about EMA first. Last week's stuff later I revise again, then I show you why I don't use any of this anymore. Okay, you have a cross over here. You know this cross is formed by this area here, okay? So you know that, okay, last time here used to be a level that price break very strongly and continue. Okay, hindsight data will be very easy to see. So you make use of the hindsight to pinpoint where now you want to see, okay? So with EMA, it's not only that you know where to trigger, you need to, if you are in the trigger already, where you're going to get out. Okay, you use your data from the past. Okay, because I say already, it's always history approach than the present. Your history will always be very important, irregardless what indicators you use. Okay, whatever indicators you use, you don't wait for the indicator to tell you to get out. Okay, because by then it's lagging. By the time you want to get out, you might not even get out. You might not even be able to get out. Okay, so don't just take the indicator as it is, because it's lagging already in the first place. Okay, so for like TP, stop loss, all these, like for example, like TP, I just give you like example for what I have already shared, right? You can take a very nice shot from the retrace over here or here, okay? But if you don't know where you want to get out, right, then you get stuck, because this indicator only tell you to get out after this cross. So if let's say you enter here, wait, I delete everything again. Let's say you enter here, you say, oh, okay, EMA, we got a cross, we enter here, or maybe you even enter here, I don't know. Okay, the only cross happen over here, if you are entered in these two position, right, you more or less already, I don't know whether you will still hold it out, hold all the way, or even you have here, right, you already lost out on all these profit. Let's say $40 of 140, right? That's what, almost 50% already. Okay, 30+%. But it's still, I mean, it's still profits, right? So you cannot wait for indicator to tell you to get out. Okay, but of course, with that being said, if you can open so many indicators, let's say you have a TradingView Pro account, okay, I don't have it, okay. If you have it, right, one way is you have your 50 and then 200 already, and maybe you have 100, okay. You throw in the other 3, so you total you got 6 lines, okay. Okay, or maybe you don't throw so many, maybe you have 1321. Okay, the 1321 in a way, right, will already tell you early signal of price maybe cutting back above already. Okay, that's one way also. But otherwise, a simpler way, you look back to the past where they got crossed before, go find an area, draw out your area, you will know where you probably want to be safer. Okay, I mean probably you want to get out or anything. Okay, then also with these, right, also why you see now that I draw this line come out, right, then I just want to explain also is if we just look at it just simply, right, just like that on EMA itself, right, like I said, you look for cross, you look for retrace, you look for trigger. Okay, so in the event, if let's say they just cross very long ago already, they just keep running and running and running, is it wise to find a trigger? Yeah, anyone got Any opinion? Yeah, I just trying to make this more interactive lah. Okay, so for example, you have the EMA already did a cross very long ago. Like, okay, for example, this one. Okay, we have a cross over here. We get a golden cross, right? Basically, the shorter length cross the longer length. Okay, they run this EMA all the way for 2 years plus. Okay, but because the cross happened so early, right? Will it be wise to go and find a trigger at all these EMAs? This one, I mean, I'm leaving it open-ended lah, because there's a lot of chain of thought on this. Okay, because it's the same thing. It's like I explained, your EMA or any moving averages you use is always like a dynamic support and resistance. Okay, so as long as they are holding, technically, logically, right, it's still a good area to continue lah. As long as they retrace, we go, retrace, we go, retrace, we go, retrace, we go. We just non-stop, we just keep retrace and go. Right. So my personal opinion is, doesn't matter where they cross, as long as they are still holding at the point of time, of course. Okay, then now you need confluence. Okay, this is why I say once you start using indicators, right, you need a lot more confluence. Reason being, like I say, EMA you can just keep going because you got a break retest, right? It's like not break retest. You have a retest back to the dynamic support and resistance. You continue to bring the price in the direction, because basically they are telling you the trend. You are still looking at it. Okay. This is when your other small, I mean, okay, it's not small knowledge. It's like you need to find confluence. Like, for example, now that we are talking about this, I will share on the Elliott wave lah. Okay, since we are on this, it's not 100% the way okay. Elliott wave, they have 5 waves. Okay, now I just give you a bit more stuff lah. Okay, Elliott wave, you have 5 waves. Okay, basically you have 1, 2, 3, 4, 5, basically a zigzag. Okay, so in this, what we are looking at, this zigzag, you see, this is the problem also, because you can zigzag here, then you stop here. You see, you have 5 waves. The first wave, then after that you have one small retrace, you have a third wave, you have a small retrace, you have a fifth wave. Okay, so basically the theory, the idea is, all these markets, right, they are basically, they will only run in these 5 waves, then they will make 3 waves of correction. Okay, if they want a continuation. Okay, but slowly over time, I just keep thinking over this. I realize how am I going to draw? Of course, in theory, very easy to see lah. Okay, I just give you why I say in theory very easy to see. Okay, sorry for those that come in to know about like a lot more, right? But I'm sorry that I want to share this because on feedback we have this. Okay, I want to share because I did my CMT, right? They tell me wave 5 waves. Okay, I say fine. Okay, I just need to remember the rules, right? You have 5 waves. You have 1, 2, 3, 4, 5. Okay, fine. Easy to spot 5 waves. Okay, but then they give me this diagram, something like that. Okay, the wave 135, right? Wave 135 is basically this wave 1, 3, 5. Okay, they are impulse wave, meaning to say they are rally or a drop. Okay, it's usually the case. Then any two, this wave 2 and wave 4, right, is basically the retrace, right? So they give me this diagram on I remember the study material I was reading. So I suddenly start to think, because you see I have 5 waves, yes, 5 wave, you show me like that, easy to spot lah. But if I open a chart, right, how do I know where's the 5 wave? Right, because the thing is, right, I can take here as 1. Okay, sorry, I just take here as 1. I take here as 2. Then they say, okay, wave 3 cannot be the shortest. Wow, then my wave 3 like that. You get what I mean? Wave 3 cannot be the shortest. Okay, then okay, even if I put here, then it don't make sense. Why? Because there's no retrace for wave 4. Okay, fine, then I put here. Okay, right? Then they say, okay, wave 4 is a retrace downwards also. Okay, then we form the new wave 5. Okay, 3 is not shortest. Wave 4 never eat into 1 and 2. Okay, wave 1 is still intact. Okay, then 5. But the problem is, there's so many zigzag in the financial markets. Not just JP Morgan that we are looking at now. Okay, across every chart that we are going to pull out, right, it's always a zigzag one. You don't have like this straight line. I'm not saying that this theory is not good to go and really read up more into it. It's just that the more I read into it, the more confused I get. You get what I mean? But that's why I only can share surface lah. This is the surface that I know lah. Okay, because I studied CMT. Then after that I see Elliott wave. Okay, fine. Then I start to learn . Okay, but the thing is, I'm not using it. I only learn to know that, okay, this is a cycle, because then they say okay, is how long persistent changes in investor sentiment and psychology. Okay, so this is the surface that I know only lah. Okay, because if you want me to draw a chart, okay lah, maybe I roughly can go and spot, but like I say, TA, there's no right or wrong mah. Okay, so I can just spot whatever I want to spot lor. So to me, okay, now I take this as wave 1, I take this wave 2, I take this wave 3. Okay, then as long as all the rules are still intact, then technically it's still the cycle lah, it's still the logic lah, right? Okay, but why I come back into this thing is after that they say, okay, end of wave 5, you have this wave, 3 waves of correction. So if I draw this 5 already, correct, 1 2 3 4 5, okay, hit the peak already, as in the peak. Then after that I see this thing, drop like that, then where's the wave again? I cannot find my 3 waves. Okay, maybe you say, okay, maybe I need to zoom in. Okay, I zoom in, maybe these are more impulse. Okay, I got wave 1, I got wave 2, then I got wave 3. Okay, settled. But the thing is, what I'm trying to explain, right, is, okay, the theory is, I mean, is maybe I'm pretty sure there's people that really make it happen, like make it work. Okay, it's just not me lah. Okay, because I struggle to really understand where you want me to draw, because it's very subjective to how far I want to zoom also. Like I see like that, wow, then you know you will start drawing from way before, right? Then you need to keep to the rules, because why wave 3 cannot be shorter? Then means your wave 1 is just this short area, wave 2 then your wave 3 all the way. Of course, there's also theory within it that tell you, okay, there's a prolonged zigzag of this wave, like wave 3, okay, extended, they call it extended. Then within this extended, there's a lot other more things, other more things like included lah. So also why I don't think I qualify to share one whole webinar on Elliott wave. Okay, I don't think I can do that, because I already struggle to draw for you the simplest one already. Okay, so I don't think I can really share, like, yeah, I don't think I can really share properly lah. Okay, because end of the day, I don't want to make you more confused than whether you are or you are not lah. Okay, but I myself, I very confused now. Okay, I thought about it and I confused already. But what I want to drive that why I suddenly got this Elliott wave come out, right, is maybe, okay, it's not that I'm using it, maybe this wave 5, right, already indicate that this might be the top, the peak. I don't know. Okay, because just now we tried drawing okay, initially this was the wave 5, the 5th wave. Okay, then price start to drop. Okay, correct, maybe. Then maybe if I start drawing something again, this might be the 5th wave also. That's why with your EMA, this guy might start to turn. Okay, so the bottom line is not to educate on Elliott wave. I just want to use that as sharing with you, you need to use confluence with your indicators, as always. Okay, you have your indicators, but your foundation will always be, do you understand the trend first? Okay, you need to know the trend. But with indicators, maybe they show you the trend. For example, EMA, they show you trend. You know that this is uptrend at this portion. Okay, so this indicator alone, you don't know what you want to do yet. Why? Because yes, okay, one way, you look for cross, you look for level, retesting back, then you continue the movement. Okay, so I would always feel it's always nice, always better to have confluence on your indicators. Okay, not saying that you should put a lot more indicators, because later analysis paralysis, you see what, cannot see anything already. You see lines, you see candlestick, a lot of things, cannot see anything already. Okay, so always be aware of that okay, but I think every individual when they trade, right, is very different, because everyone basically uses different indicators right? So you just need to find one that fit the time horizon you are playing, the kind of volatility that you are looking for, right, in the market, in what asset class also. Okay, but that's why also why I keep emphasizing, right, why I just using naked chart, right, is with that I can just draw across everything. Okay, that one, then later I will illustrate why I throw away all this stuff. It's not saying that it won't work. I'm not saying that it won't work, but I just want to illustrate why I don't use any of this anymore. Okay. Sorry, this has been dragged out very long already. Okay, so significance whether one MA cross another MA, right? Yeah, you need to wait for the golden cross or the death cross. Okay, then you wait for the retrace, then you find your trigger. Okay, that's my personal way. But otherwise, you wait for the cross already. You want to straight go No lah, better not. I think it really better not. Okay. I hope that answers you. Then after that, okay, continue our Q&A. Sorry for the delay. I talk a lot of stories. Okay, with high frequency trading, algo trading, maybe some theories not really applicable. Yes, I agree. Okay, really, I agree, because you know a lot of all these theories, right, is back in what 1930s, 1940s, 1950s. All these studies back then, that all the or maybe even earlier. Okay, I mean, as long as you read all the trading books, right, or investment books, right, once they talk about indicators, like TA one, you realize. I mean, I realize all the studies were done back in the 30s, 40s, 50s, maybe later is like 60s or 70s. You know, it's just a huge gap from 30s to 70s. In 40 years, maybe back then, okay, they are still plotting chart with paper and pen. Okay, they are still using point and figure. They don't have indicators that you press out, wow, the thing give you already. They need to self-calculate manually. EMA, okay, I need to go and find previous 14 days, I use calculator punch. Okay, that was the trading back then. Okay, nowadays, I mean, it's so electronic already. I just want to share a story because I have a very close friend of mine, okay, he's way older than me already. So he traded in the days for a local bank. He traded back in the days as a trader for them. So every day he tell me, every morning he pull out the paper, right? So he will start to plot the price, okay? Because basically you don't have electronic. So you plot the price, you just plot. Then you, in a way, you need to visualize, okay, this is the chart pattern for the day. Then you know what you want to do, right? So I mean, all these theories I mean, it's good to know. Maybe it work, maybe it don't. I don't know. I don't know enough to tell you whether it really can. I really can make it work. I cannot tell you that. Okay, but I think it's good to know. But with all the changes, right, in technology and everything, I think nowadays the trading environment is very different already. We have so many more retailers coming in. Okay, because back then, okay, you want to trade, basically you really need to know that you will start doing, right? But nowadays, anyone you want to touch the chart, open, just type trading view, okay, the chart come out already. You want to learn, it's everywhere, all this information, right? So yes, I really agree on that. Okay, so in short, you don't use wave theory because it can be subjective in a way the wave is drawn and thus can lead to different conclusions. Am I right? Yes, that's just my opinion. Yeah, it's the same. Okay. It's not just for me. Okay, this is my answer to you. Okay, for me, in short, uh, it's not just wave theory for me that it can be subjective to draw. Okay, it can also be FIBO. Okay, it can also be trend line. Even my own supply and demand, the boxes and lines I draw, right, it's all subjective. Okay, but what I want to share is I just use what I can make money out of, right? I can put. I mean, I learn all this, but it's just end of the day what I'm comfortable making money with. I will just keep using it. I don't need to. I don't want to use any other things because it don't work for me anyway, right? Yeah, so it can be subjective, but definitely people that can make it work, okay, it's just different. There is a group out there who doesn't believe in indicators, only price action. Oh, a lot, Ivan. I mean, to be very frank, okay, Ivan question is there a group out there who doesn't believe in indicators and only price action? Yes, 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 yes. Yes, I'm one of them. I mean, it's not that I don't believe in indicators, okay? I just want to clarify. I know this session we are a bit moving away already, okay? But I just want to clarify. It's not that I don't believe in indicators, okay? But just based on price action over the years, I mean, I haven't been trading for many years, right? It's the amount that I have. But from experience and back testing and looking at the market over and over, right, I slowly realized I'm more comfortable. Okay, I'm more comfortable just looking at price action and finding my levels based on my understanding and my understanding of the concepts, basically, right? Because I mean, if you don't understand the concept or you haven't been doing it or you don't know how to backtest, you don't know how what numbers to tweak, you don't know what to look out for, then of course I wouldn't say price action is for you because there's a lot more observation that you need to understand, a lot more movement and understanding of, like, firstly, volume. When volume comes in, not just by looking at volume indicators, you know that there's volume. Okay, you need to know, okay, there's volume coming in when people start to work, basically, right? Traders in US, Japan, Australia, or all these opening sessions, when they start to work, what time they work? 9 o'clock. Okay, they sit down. Do they work straight away? Maybe, maybe not. Maybe they buy coffee, this kind of thing. All this is just the backstory of what I went through when I traded for a prop firm, right? Because when you go to work, okay lah, you not straight away, wow, you work the whole day already. You don't know, you go there, you wait, prepare first, get some coffee, relax, look at the market, okay, then you start to come in. So that's where I start to slowly understand there's timing to where volumes might come in. Okay. Then also, like I explained just now, I shared about a friend of mine that I knew quite long ago. Okay, like he's an old man already lah now. So he traded the old school way of plotting on the paper and all. So I don't know if I can say this on recorded. I don't know if I can, but basically what he trying to tell me at the point when he was doing like trades, right? He just tell me one thing, he never say specifically. It's up to my imagination to think what he's trying to say. Okay, so after lunch, he was telling me the story. After lunch, okay, he is waiting already, preparing for a position already. He does intraday. So he was trading for a local bank. Okay, after that, he prepared already. Then he make a phone call to his friend. He tell you let it flow. Okay, so that's the story. But I don't know what is let it flow. It's up to your imagination. Okay, but yeah, Ivan, I think yeah, still have, still don't have So I mean, it's up to us what you comfortable using. I think really is you must be comfortable using it, because if you are investing, right, maybe TA, yes, you can help you find better entry points and everything, but you probably won't be looking at chart every day. But if you are a trader, let's say you are really you really want to, you like charts like me, want to every day look at chart you cannot stop okay, then you need to find something you really comfortable, because you need to look at it every day. As in, you going to look at it every day already, right? Syndicates use fake out to track retailers using charts. This one very subjective. I think whether fake outs is intentional, right? I think the word intentional. Okay, fake outs, whether they are intentional, that one I cannot give you a straight answer to that. Okay, but yes, there's a lot of theory behind, like theory behind fake outs is basically saying that, okay, because we know that we know that it's not just to trap retailers. Basically what they are doing is, okay, they know that there's people putting their stop loss, for example, on this chart. You, like, for example, you have this whole chunk of area over here, okay, this range area. If you are short, or even if you are long, okay, your stop loss for each level is basically below the previous area, previous level, or however you identify. Okay, or maybe you use average true range. Later that one I need to explain also, right? So it's always below this kind of levels that is quite obvious, in the sense that, I mean, where else do you want to put you? Yeah, maybe you stretch to the lowest, but it's still behind something. It's still lower than something or higher than something, right? So there's a lot of theory saying, yeah, maybe price, all the big boys try to push price above so that they can eat you up. Yes, I mean, firstly, yes, for that to happen, for them to push through that level, firstly, they need volume also, right? So then they start accumulating. So this is the theory that they say, okay, they start buying, okay, give you a fake out, after that, give you another fake out, right? But if you slowly look at it across, I think most of the time, the levels of fake outs, right? Yes, it will happen, okay, but it's not every time okay, but coincidentally, right, sometimes they will be into the next level already, okay, which is over here, okay, they will be into the next level already. So I cannot give you a straight answer whether really got people just use, like, they just prep everyone. Okay, maybe because we start to think about GME, right? GameStop. GameStop 3 years ago, what happened? Everyone say, okay, buy, bam. All the shorts did, right? Yeah. Maybe because of that, we have more idea that, okay, maybe people are really doing that. You get what I mean? Okay. For equities, yes, definitely easier because you have so much float only. Okay. But in terms of any other asset classes, like Forex, commodities, right? There's no way lah. So, but then we still see fake outs on those charts. So I cannot tell you straight that, oh yeah, it's really people trying to push something. Yeah, but because of GameStop, we might have a different opinion now, right? Okay, I let Xiong talk a bit. I talk. Wow, okay, I let Xiong talk first. Okay, thank you, thank you.
Hey, yeah, great. Okay, sure. Yeah, thanks, Jie. Wow, Jie has been sharing a lot on his information. I also got curious and follow up. So anyway, we're just gonna let's bring back. Let's be on topic lah. So I just want to bring across whatever we said here doesn't mean it doesn't work for anyone else. Someone else out there may be using Elliott Wave and earning big bucks. You never know. But maybe for us, we're just not comfortable. So it's like if you go back to the first session, we also talked about the patterns. I thought it's quite relatable. If you can identify head and shoulder instantly, then that'll be great for you. But it's gonna be difficult lah. That's what we're trying to say. All this is gonna be difficult. So I was just looking at the Xiaomi chart. I think someone asked for Xiaomi just now. So I'm just gonna apply whatever you learn. I have friends who solely just use EMA and they can profit from the market as well. You don't have to use a lot of different indicators because it's gonna confuse you. And you need to understand that indicators are mostly lagging. Okay, so even when you see suddenly cross already, actually the price already moved. And by the time you go in, it may be a fake out. So it depends. All this is really up to how you wanna trade and look at charts. But we're just gonna teach you some general. We're just gonna equip you with whatever we have, and then you guys are gonna apply it on your own, depending on how you like it, okay? Because what we see on the chart might not be what you see on the chart. So that thing we need to get it clear, okay? So let us take a look at the whatever we learned today, So EMA, once again I'm looking at EMA. So I have friends who just solely rely on EMA. Anything below the average moving average, right? They just buy . So although it's kind of it is not 100%, let's say, all these not 100%, okay, but some of them actually just use it and then they can profit . So one thing is also, so we talk about volume . So one way they use volume is they look at the convergent divergence. So you can see this is uptrend of the market, and then the volume starts going down. So what does this indicate? It will also tell to some of us it will signal a turnaround on the stock price movement. So that's one way we use volume. And then of course there's different other methods that how people use volume to actually see the price action movement. But if we look at this chart, we are looking at a decreasing volume. So from theory wise, everything seems perfect. It is expected to come down, but once again, you do not know when, because all these right is actually up to your own personal preference. So that's why we always go back to the fundamentals, whatever we learned earlier. If you missed out the first week, we talk about support resistance. So that is something very, very important. We want to get across again. So usually what we'll do is we will draw the different lines. But then now like no lines to draw. I need to bring it all the way back. So if, let's see. So once again, this is very personal perspective. Whatever Ying may draw later, it's gonna be different from where I'm gonna draw my support resistance. So all this is up to personal traders. The more you're in the market, the more you can see it. So usually so for Xiaomi chart, right? I'm drawing this support right here. It's a very big support. Let me tell you that first. So it's not a very clean one. Why? Because partially I don't really follow Xiaomi, so I can't really tell you a lot on this chart itself. So if I look at it very generally, this is where I'm gonna put my support, and then my next weakest one is probably around here, this level. Okay, so maybe Ying will do up some for later charts. This is what you guys can then to see how we view the markets and the different counters . So once again, I don't really follow Xiaomi. This is what I'm gonna draw on my TA chart. And then we have volumes and EMA, which I don't really quite use, but it's there for you guys to understand how it works. Okay, so slightly now, of course, it's on the upper side, right? Let us take a look at the next resistance line. Is probably here. So this is, I'll just make it red. Okay, red very clear for resistance. Green is for support. So it's meeting this resistance line and it seems to be going up all the way lah. But of course, looking at the volume and moving average, we are expecting a turnaround for the stocks itself. So this is something I want to share on how we actually view the price movement or how we want to take our trades lah. So if you guys got questions, please let me know also, because this is also once again personal. You don't have to trade, you know, don't have to draw the charts like how I draw it. It's also up to you. Okay, this is how I would probably draw it, because once again, I do not know anything about Xiaomi. I never follow. I only know recently suddenly went up because what government wanted to pump money or something. But other than that, I don't really know anything. Okay, so if you are following this and you know a lot about this company, you know it's fundamentally doing well, you know, long-term wise, you want to enter the trade. But is it at the right time? I can tell you, you need to wait a bit, okay? Let it come down or break this resistance level. And then I think that'll be a good time to enter. But if not, it's on the high side. And any movement, like if you buy now and it drops, you're gonna lose quite a bit on that. So it's up to your personal preference how you want to trade. So this is something I'll just draw for indication. Once again, all these, right, all the patterns in the chart, we are not stopping you from using. If you understand it perfectly well, please go and use it. If it does you good, it earns you money, go and use it. Okay. Yeah. So back to you, Ying.
Okay. Wow, I think today I talk until don't know, of course, very long already. Okay. Sorry, got one question. Haven't talked a spike in volume in a single day. Yes. I know lah. Just now I of course too much already. But okay, now I bring it back to today's webinar again. Okay. I'm so sorry. But volume, okay, just now Xiong shared about divergence and convergence, right? When price is going higher, by right, volume should continue. Okay. If you think back on the slides earlier, you can think of it as acceleration. Okay, so if price is going to continue higher, it's better that you have volume supporting that price movement. Okay, so when we talk about volume spike, okay, like volume, what kind of volume really, what volume is really important, right? Is you see, you look at this chart itself when I'm showing, you just draw the average out, not average, like most of the candles are all printed, the volume is basically below this level, right? You can see you just need to draw one line basically, right? You find all the outliers, okay? Those that suddenly appear suddenly got spike in volume okay? So what happened is, you have this spike. How does it help you in your trading? Okay, that's the most important. I mean, other than that, I don't need to know why it happened. Do I need to know? I don't think I need to know as a TA guy because as long as price is going to print in a certain way reflective of this price, this indication, right? Then I don't need to care why it's there. I just need to know, okay, what can I do with it? That's my understanding, okay? But if you want to know why, then you can go and find on 13 March 2023 what happened and 14 April 2023. Probably got some FOMC stuff Okay, so with outlier volume, right, meaning to say you have volume that is not the norm, basically not the norm okay? It's higher than every other norm, right? You find the candle, okay? So for example, 14 March, this is the 13 March. This is the easiest way to do it here. 13 March, you find the candle, draw the whole candle, okay? Just draw the whole candle. Why you need to do that? Reason being, you know that this day there's a lot of buy and sell, okay? But the thing is, you don't know whether price will continue higher or downwards or wherever they go, okay? So, but because this day itself, we have a volume spike, okay? You know that this volume is confirmed way higher than every other average already, okay? With this volume there, basically it turns into what? Turns into a level of supply and demand. Okay, reason being, you have a lot of people buying and selling here basically you don't know whether who win or who lose. Initially, maybe the supply is still holding, but optimally the demand, you know that demand is from here because you have another spike on this day itself. It's the same area that they both they basically get up from okay, so you know that this whole area here, you have a lot of buying area, not buying area, buying level, because what happened? You have a lot of volume coming in. This volume here maybe because people get SL or whatever. Okay, that doesn't matter. Because what you need to know is this volume spike itself is basically just going to form you a supply and demand level. All right, this is also the simplest way to spot it. Okay, because you just need to find the highest level. You just box the whole candle basically all the way until they have another outlier in the same area. Then you take the latest guy. Okay, then it's the same thing. You have another outlier, you draw. Then that's it. Volume is just like that. I think to me this is my understanding Unless you want to, of course, slightly differ is you have conversion, divergence, and stuff like that, right? Like for example, you want to know, okay, price is going higher, like here. Okay, here flat, but then if price keep trying to push higher, means got problem. Why? No volume is supporting the price movement. Okay, that's why ultimately you have some volume coming in, price is coming down. Why? Because here it's not supporting the up move. Okay, so same thing you need acceleration to push up the upslope. Okay, but if you don't have the acceleration, you will get stuck and get rejected. Why? Because the car will go back It's not that it will start to decelerate, okay, but it won't go below zero okay, in the car terms. Okay, but in terms of chart, right, it's basically they cannot go through, they will roll back It's the same thing. Okay, but the easiest way for me to look at volume, I find the volume spike. Okay, do I need to know why? It's nice to know, but I don't know. Okay, so I just find the volume spike, I box it out, I wait for movement. As long as price, for example, like this guy here, it's not that okay, I got a high volume, subsequent day still high volume. I don't know whether they will go down or not. So you cannot trade off once they form, right? You cannot trade off the short from here. It doesn't work that way. You need to wait for price to move away from it first. Then they come back to the level. So it's the same case as here. You cannot just trade off, hey, they break already, then I go. Okay, so here I probably don't do anything. Why? Because they just went. I don't know where they are going yet. So the only opportunity is when they are back at this level, like maybe last week, right? 2 weeks ago. Okay, then you know that price is back to this outlier again. This outlier here, which I box out. Okay, I got another outlier. Let's take a look. Where's the guy? This guy on the 13th October. Okay, it's the same guy. So basically, I just take the latest guy. I just box him. I delete the last guy. Then that's all I have for my volume. I just need to know if this guy can break above or remain to stay below. Then if they stay below, then you know that what you will have, you will start to have this guy trying to trade within this guy again. Okay, so volume, my understanding is this. This is how I made use of volume back then. Of course, if you have TradingView Pro, right, you can use the volume profile. Okay, volume profile basically give you point of control. Point of control is basically a single horizontal line. Basically tell you at what price point exactly is a price point already. That one volume profile is a price point. Your POC your point of control will show you exactly the line. Okay, so what you need to identify is whether price is trading higher, as in trading above or trading below. Then you will know whether what is your next move. Okay, so volume, my understanding is basically just like this. Conversion, divergence, that one you just need to know. You don't need to draw it out. I think up to you You want to draw, don't draw is up to you. But for me, I just see like, okay, I give you another example. If you don't know how to spot, just see here. Okay, you have volume downtrend. Then what is this period over here? They are trying to move higher. Then they basically start a cap right? Because you have this outlier here, which you already identified. Volume start to be thinner when they're going higher. So what will happen? Basically they don't have enough volume to push it okay, so this is volume my understanding so I just going to explain in my own ways okay, so if go correct, I saw on chat yes, volume spike can be due to basically it's a catalyst in the market. Okay, it can be earnings release, it can be data, FOMC, it can be anything across every counter, every market, anything. Okay, so so if I look at I just find the outliers, right? I just find outliers. Okay, how about this? I just pull another chart. Okay, this one we already draw until very messy already. We just get something else. What other counter? Let's see. Okay, Google. I very long never see already. Let's take a look. Okay, this is not counter review. I must say again, not counter review. I just want to show you what my understanding of volume, and maybe you can try to use it. Maybe. Okay, so same thing. Okay, we just look at this chart. Average, okay, it's not average it's just average daily is okay. I just draw this line. Okay, then I just find a very obvious outlier. First one is confirm this guy. Okay, well, this guy is what? This guy over here, confirm one, right? Because see one time, wow, we know that this one overshot already. Sorry, I don't know what's happening. Okay, yeah, this guy over here is confirmed. Then we go and pinpoint the candle first. We go find the candle on what day? 9 February. Okay, 9 February, we box this guy. Okay lah, then that's it lah. Is that all? But cannot, because price is currently trading higher already, right? So we no choice. We need to go even further. We need to find another outlier. Okay, this guy look like an outlier, right? This guy over here. We just find the highest guy. No, sorry, not the highest guy. Sorry, I say wrong. Find the guy that printed this candle. Sorry, this volume. The candle that printed this volume. Okay, the outlier one. Okay, then we know that it's this guy. With this, then we just drag all the way. We just drag. Just keep dragging. Okay, drag until current. So we know that, okay, currently still nothing because we have nothing to do. Okay, then along the way, you have other outliers, right? So you have other levels that you might need to take note of. Okay, but now, you see, I can have a lot of boxes because you have a lot of outliers. Okay, you have one more here. But like I say, you just need to take the most right outliers. As long as they, like that, you see, for example, this one, we have outlier this candle. We know that the volume also quite high over here. Over here, this guy, right? Out of all this is one of the highest. That's why I drew this and I'm going to draw this, right? So this guy I draw initially, it will be like this. Okay, initially. But after that, because of this box, this outlier that appear after that in the same area, right? Then you don't need to care about that guy already. Basically, it's gone already. Okay, because the volume is basically taken away, then you don't have much volume there, then it's not going to be a level that you need to take note of. Okay, so it's the same thing across, but the tedious part is you probably need to just keep scrolling through to find the outlier. That's the very tedious part, because the thing is, you need to keep seeing whether the right side will shift, right? Because you cannot miss one guy, then later, okay, you don't know what you're missing out on already. Okay, so this is the tedious part where you looking for all these outliers to drop. Okay, earnings or whatever suddenly got some surprise over here. Okay, these kind of levels, you need to go and draw it out. Then you go and pinpoint the most right area for your levels, for a volume level, not a price level. Okay, so your volume with that, then you need to see then whether can price continue to stay higher or lower. Okay, another simplest, really simplest, and you cannot simpler already, right? You just scroll all the way. You just scroll. Okay, I don't need, maybe not until so far. You just really scroll. Okay, just go and draw the highest two or three. Then that's it. Then you just leave it already. Okay. But of course, with that, then you will have lesser frequency of what you want to do, because price might not be coming in yet. Okay, so it boils down to, what are you trying to achieve from looking at this chart, looking at the volume and what you want to do. Okay, I only can share with you like how you can make use of the outliers. Okay, like for example, recently we got one outlier also. Okay, even if we just look at this 9 months area, okay, this 9 month area, we probably have this guy. This upper guy is probably still there. This bottom guy is still there. Okay, so we just leave it as it is, because everything else you see just across this area, just across this area, volume very flat, right? It's not down or outlier. It's just basically there It's just there for the day Okay, the only outlier study appeared was 2 weeks ago, 3 weeks ago, 1 month ago, I don't know this candle. Okay, they created this level, price strike going lower, fail. Now price going higher. So what you need to be concerned of is, we know that the market is coming bullish now, right? We know that price is trying to go higher. So you just wait for price to go, or wherever they go, see whether this guy can hold. That's it. This is not a trade call or anything, but this is just how I view it, just using the volume. Okay, but so it's just like that volume. Okay, do you need to care whether now you see the volume thinning out, then price trying to go higher, candle trying to go smaller? Yes, that's why you don't go and jump in now. You just wait for some retracement. Okay, as long as they can hold back at a level, right, the volume level, then you will know that you will have a higher probability I'm not saying that you will know that you will win. Higher probability. Okay, you give yourself that probability to try to make something. Okay, then it's the same I mean, okay, you see, if let's say I know I keep saying the same things, but if we just look at this 9 months, okay, I don't want to drag so far already. We just talk 9 months, okay. I think we are on all this EMA volume for quite a while. Okay, I just 9 months. I just draw back the same outlier. Okay, this is the most bottom. I cannot run. Okay, I take all these others all these other that is outlier one. So basically I got 3 more, right? 1, 2, 3. I just draw. Okay, I just want to illustrate again why you can. I mean, basically, this is an easier way to read volume already. Okay, you don't read it based on, oh, one day today high volume. So what? This is basically more people trading. Oh, that's it. It's not going to tell you any more data. It's just a lot of people trading. Okay, but if you want to make use of the volume to find something, right, then you need to go and find these levels, as in these outliers. Okay, and the last one basically here. Okay, so you see, if I use 9 months, right, just based on volume, right, it's basically just telling you that price is just going to keep going higher for now. Okay, short term wise, maybe they got some retracement and stuff like that. Okay, but generally, right, all the volume, okay, the price is still staying above all these volume area. Okay, means all these volume area, right, means of course there's days that they can take profit and all for sure. Okay, but we don't care. We just know that back then this was the volume that created this movement. This whole price area is where people are concerned of, because a candle closing, right? A candle closing is very important because it shows the willingness, willingness, okay, to hold a trade through the day, okay, which is very difficult because you're going to sleep, you wake up, let's say you trigger Google, okay, you trigger yesterday, then you say, wow, this kind of candle going to close already. I don't know whether to sleep or close my position. You know, you have all this kind of aspect of your psychology, right? To think, wow, should close, don't close, buy more, sell more, whatever. Okay, so the closing of a candlestick, right, is always very important because it tells you a lot more on the intention and whether the willingness to hold it out. Then with that, right, that's why all this volume, you have high volume, you need to know where they close. Okay, but it's not to know, oh, this day the volume high why? I don't need to know why. I just need to know whether the price whether it's higher or lower, then I will know in general. If you have a lot of volume below, all your levels are below, all your outliers levels are below, right? The price keep going higher, right? The price is basically staying above, then you know that it's still on a bull trend. All right. If the price starts to if the volume start to have, I mean, it's just both sides, you have a lot more on the bottom but a little on the top, right, then you need to think already. If you're a lot on the top, then you know that it's confirmed downtrend already lah. That's how you see. It's not because, oh, the volume is red or green. Okay, I hope that explain, I hope that explain it lah. Okay, I pass to Xiong for it. Thanks.
Yeah, I thought that was a good explanation from Ying on the volume. So if you guys still don't really understand volume, please let us know through the Q&A. So I thought someone gave me a very good idea. He asked me, why not use the counter yes, like use, illustrate a counter that I follow. Okay, I'm gonna show you Adobe. Adobe is something I follow very closely. And then why we emphasize on support resistance level, it's going to be very clear here. You look at it. Okay, you look at the resistance and support level. I just draw these two it's been here for a while. But you can see price actually stay here and has been here for that period of time until it broke recently. And then rally came about. So once again, if you look through why we emphasize on support resistance and why we actually draw them, usually they will stay within this level. So when they stay within this level, you roughly know when to buy, right? Buy at the green, where I draw the green, you buy at the green, sell at the red. You're gonna profit this amount. Okay, for this period, you're gonna take profit. But is it always what will you need to be concerned of? Okay, so support resistance is you need to understand that it may break your resistance. So usually that's where we try to get out lah. Okay, that's why you have 1 point, 2 point. You see 2 points that we got out, and then at the last point here, okay, once again, if you look at you came for last week, this is like a double bottom. Yeah. So once it breaks breaks this resistance level, it's also a time where you can actually go in. So this is how we do our trades. So this is something I follow very closely. I've been following this counter. This is one counter I've been following closely lah. So just giving you guys some trade ideas on support resistance, how we actually look at them. In terms of volume-wise, I thought Ying gave a very good explanation, so I probably wouldn't touch on that. What I will emphasize on is still the first lesson. Please go and watch it if you guys missed it last week. Support and resistance still gonna be the fundamental, the backbones of what you are gonna base your trades on. So once again, this is on the probability basis. The probability of the stock breaking your resistance level and when you're gonna take profit. So that's something to consider lah. So if you ask me how will this Adobe move, despite I've known this counter for quite some time already, it is still midway lah, somewhere in the middle. I see I see this resistance. This is actually COVID level. Can you imagine Adobe, one of the few stocks that heading back to COVID pricing? So this is the level I'm looking out for. This is the resistance. So this is where I will probably exit my point. If not, I'm gonna wait for a confirmation. So yeah, that's something. I just want to thank the guy who asked me to show a counter that I follow. So this is the counter that I follow. If that's what you're wondering. And then usually I'll draw some slope resistance, slope support lah, basically. So if I put it green, let's see. If I put it green right here, yeah. So what I'll do with this green bar is that once the counter starts trading below, actually it doesn't even have to reach this green. Okay, once it breaks it reaches back to the support lah. That's probably my stop loss lah. But of course, this is all up to you guys. Depends on how you guys want to trade. I'm just giving you some very basic examples. There are more indicators that you can use to give you confirmation. To some of you guys, you might use RSI, MACD. So you can include those lah to give you more, so that you're more certain of your trade. That's what we actually use, but technically, like what Ying is doing right now, you don't even need all these indicators, but it's to your comfortability level lah. Okay, if you want to take trades, you need certain indicators to tell you, okay, it is time, then so be it, use indicators. Okay, indicators will benefit you. It will benefit different people on different levels lah. But once again, we're just gonna touch back on the basics. Once you have the basics of understanding a chart, right? You can, I guess you are more than 50% to actually take profit on your trades itself lah. So yeah, once again, thanks to the guy who mentioned about showing my chart. Anything else, do let us know in the Q&A. We will look through and touch on it. So yeah, back to Ying there.
All right, I'm back. Okay, I will just continue the Q&A first. Okay, Ivan, sorry, what do you mean? How do I tell an extension exhaustion bar from a strong bullish continuation bar? Well, can you elaborate a bit more? Sorry, I don't get it. Okay, are there indicators that are lead in nature rather than lag? Generally, no, because you see, I mean, lead maybe Ichimoku, right? Ichimoku Cloud, okay, I just throw it out here, okay. Why I say I think that one is leading, because they have data that are reading, it's not accurate data. It's just telling you that, okay, eventually over here you have a cloud. As long as price continues to stay in the cloud, it should be higher around this area. Okay, you see this leading area. Okay, but all this leading is based on basically your formula that you put in for the data. Okay, because indicators all need data to basically print the indicator, because if you don't have a data, then you cannot do anything. So all this leading one, right, basically you're just using some of their formulas that they are giving you data, okay, giving you indicators that, okay, this might be the area where price should be looking to continue in. Okay, you get what I'm trying to say, or the question? Yeah, so generally they are all lagging because you need data to print the indicator. Yeah, okay, then with this, I think with this, okay, wait, now, okay, another question is, candlesticks bars, exhaustion bar is supposed to tell us end of bull trend and big boys are getting out. Okay, Ivan, very good question. Okay, I just want to share with everyone here. Okay, candlesticks, right? You have many, we have, okay, not you. We have many candlestick terms and names and everything. There's so many different candlesticks because the market itself, right, is just basically price moving and everything. Okay. So one thing to note, one tip I just want to share is I think Ivan asked a very good question because, like, for example, exhaustion bar is supposed to tell us end of the bull trend and big boys are getting out. Okay, question mark. Yes and no. Okay, because firstly, candlesticks, right, you need to know that where are the candlesticks appearing at. Okay, if a candlestick appear in the middle or nowhere, like in the middle of a range or that just get up and continue, right? Then if they appear in the middle of a range, it's not an indication that big boys are getting out at all. Okay, because unless, okay, another way you can look at it, but with more clarity, right, is, okay, maybe you pull out your volume chart, volume indicator. Okay, and you see, okay, big bear candle. Okay, what about volume or not? Oh, maybe have. Okay, means a lot of people buying, a lot of people selling. That's about it. It's not telling you that they are getting out. Okay, that's one thing. Second is, where is this candlestick? Okay, in the middle of nowhere, or is it approaching a support or resist, a supply or demand level? Where is it? Okay, most of the time, if you see a lot of strong level that strong candles that are printing, right? Firstly, you need volatility, which is volume. Okay, second, you need price to be at a level where they will reject basically, which is your supply and demand level. Okay, but even, I mean, it's not an indication that they are getting out fully. Okay, because there's also instances where they will try to push price to a certain point and continue to accumulate. That's for sure. Okay. Yeah, I hope that answer you, Ivan. I don't know if that's exactly what you are trying to ask, but I try to explain to you what I know. Okay, then now since we are almost at the end, then I just give you one average true range first. This one I just want to share a bit. Okay, this one, do I use it? I don't use it. Okay, so this one always take note on trading view. Since we are talking about, we did share about average true range today. Okay, so I just want to pull it out again before we jump back to last week stuff, a bit of last week stuff. Okay, ATR, if you are using on trading view, please take note. You open your ATR already, right? You see this one 14 RMA. 14 you can leave it, but this RMA smoothing, right, change to EMA. Okay, slight difference, but it will give you more recent data. Okay, like more weightage on the recent data. Okay, so how do you use your ATR? Okay, you just need to see, you put your mouse here, you just look at the ATR. Okay, the number will show on the left side. Okay, wait, just okay, now currently is here. Let's say you want to trade today. I don't care what I want to see. I just want to trade today. I just want to buy Google. Let's say you buy Google. Okay, you want to know whether ATR will work. Okay, you find ATR, the number over here, you take note. On the left side, 2.77, the latest one. Okay, so the normal cases, right, is 2 times ATR, 2x, 2x of the ATR. So it's 2 times 2.77, 2.77. Okay, which gives you around what, 5.54, okay, 5.54, right? So 5.54, you just minus from whatever price you went in at. So let's say you went in at 134.5. Okay, for simplicity, I will just take it as now it's 135.54 okay. So with that, your ATR is 130 because you minus 135.54 minus 5.54, you have 130. So by right, this ATR is tell you, okay, if you trigger now, okay, based on previous days candles and price range, the average is 2.77 a day, the movement. Okay, so to be safe, this number can be tweaked these 2 times, these 2 over here can be tweaked. It's up to you okay. If you want to stretch, it also can it's up to you but usually the general is 2 to 3 okay. So I just giving you example. For example, you put now is 135.54, you trigger, your SL is 130. Okay, but what I explained just now earlier also you see your SL is 130. You know that, okay, I just zoom a bit more. 130 is 130, 130, 130, 130 is right over here. Then you zoom in, you see, got 1 week over here, this guy. Right, I just show you again. 130 is right over here, right at this guy. Right? Then you got this week. I mean, just put your SL below this guy Okay, so you don't need to. This ATR is not fixed one. It's not a date number. Okay, but generally a safer way to do it is 2 to 3 ATR will do. You don't give like what 10 ATR, then means what your risk to reward, you definitely need to hold it out. Okay. But generally, if you are playing on 2, right? This is what I'm trying to say. If you have your ATR within the area itself, which don't make sense, then don't put there. Just put to the end of it. Okay. So it can also be here. Let's say you trigger here, then 2.54 maybe it's here. Okay, don't put here lah, just put here lah. That's it. Okay, slightly more, but of course you adjust your risk accordingly. Okay, so ADR is just like this. For TP, same thing. You got 5.54, right? Then you just, yeah, it's here, just nice is at the resistance already. Just nice one, sweet. Because why? This is the range that the price is moving for the past 14 days. So it's more or less is the area. Okay, so this is average show range. Need more clarity on this? I don't think need, right? I think this one is just straightforward. It's just like this. Okay, you have to determine. It basically tell you firstly what's the price range for the past 14 days or whatever days you put. Okay, it can be longer also. Then if you were to trigger today, basically they tell you on average, right? Will you get SL by today lah? If you put 180, that's the simplest way to understand it. Okay. Okay, let me see. What? Okay, got any other questions on TA? I know just now I throw a lot of thing on EMA and volume. That one understand? Yeah, okay. Volume okay. If not okay, I can go through again. I can put another chart come out. If okay, then I will move to the earlier Q&A already, which is asking about major and minor resistance and support. How can we identify it? Okay, I take no response as okay. Okay, let's go. Okay, support and resistance. Okay. How to identify major support and resistance? Okay, firstly, I think the easiest way to do it, like last week I explained, I want to say again, this is not counter review. I just use Google since it's here already. Okay, support and resistance. I mean, okay, last week I tell you, okay, yeah, easy to find out. You just find 2 points or 3 points touching each other, then they form a support or resistance, right? Firstly, you alternate R your thing, okay? Your chart, alternate R, same thing. We set until 9 months, okay? This is for illustration. I just sharing with you what I will do, okay? How I know whether it's major or minor. You know that previously this area here, okay, we got rejected, correct? Very obvious lah. It's already reject back to 120. When 120 we got rejection, okay? So at this point, how do we know that this guy is a major or minor? Okay, generally, the simplest way, and you don't try, I mean, if you don't think so much, you're just playing on, let's say, intraday. Okay. Sorry, no, not intraday. Swing. Let's say you're playing on swing. Intraday cannot. Intraday, you cannot have this mindset. For swing, still okay. How you know if, regardless major or minor, right? Basically, you just need to know whether they stay here or get out of here for swing, right? To identify whether they are major or minor, you need to scroll. You need to look at back then. Okay, you see, back then we have this whole area of range. Okay, firstly, we have this first. Price right going up, lower, going higher, fail, they created a range. Okay, so you identify, we identify that we have a range, a huge range area over here before price starts to trade really very low. Okay, back to 85. So this whole area, they broke already. Okay, after that, they have another area, correct? They created one more. Price start to trade lower again. That's why this whole area here, back then in 2022, this down move, this range before the down move, right? They created this whole area. Subsequently, this whole area will become a level for price to break away from. Okay, you need to understand this area first, these two areas. Okay, with that, you know that this was an area that broke quite strongly after that. Okay, like price continued to go lower, and this area was formed before when price was trading towards the all-time high, basically. Okay, they broke first. So the price broke higher. Okay, this is a storytelling that you need to know before you can know whether it's major or minor. That's the thing. Okay, because we have this continuation of bullish trend. Okay, up move. They created a range area. They created subsequent one. Okay, but most obvious one is basically these two only, like throughout the whole outrun, right? These two is the more obvious one because they probably built for quite a while, okay? Like 1 month each, 2 months, no, even more than that, 3 months, okay? But the major or minor is not determined by how long they build. Yes, firstly, yes, maybe a bit to a certain extent, okay? But also, when price starts to move upward, you know that price never come back into this guy already. Okay, this guy also never. Price continue already. So when they hit the peak, right? When they started forming this area in 2022, 2021, price starts to after that price start to move lower. They created this guy again, and this guy is sitting above the previous level. Okay, when they start to turn from here, right? You know that this guy. Okay, when price starts to continue moving higher and higher and higher with higher high, higher lows and stuff like that, right? And they start to form a new area of interest, right? Which is shown right at the cap. Okay, you know that this guy is slowly becoming a major. Why? Because price never come back into this guy. Never, not at all. Until how many years later? 2 years later. 1 year plus, basically. Okay. And the thing is, you need to know is how we know that this guy is major. Price continues to stay within it. Okay, price continue to tap and go, tap and I say never tap and go lah, basically tap and reject lah. Right over here, it's the same area over here. Okay, so you have a major. Okay, one guy is trying to break the major. Okay, we have a major here, firstly. We have this major over here. We have this major over here. Price tried to break the major, failed to break initially, eventually broke. Right? So what happened? This guy became the major lah. Right? Why? Because eventually they broke and price never come above for damn long already. Unless they broke, okay, here then they straight away go. Okay, then fine. That one nothing wrong. They breached the major to take over the level. Okay, this is basically just supply and demand. It basically I just showing you in a bigger box. Okay, but of course with this, you need to pinpoint to the very small, tiny details, which is way into all these candles already. Okay, you need to find the lowest candle, just highlight the candle. That candle itself is the guy already. Okay, so for example, I tell you this is a major area, right? Why? Because explain, okay, you have an area where price never come back again for a period and continuous creating higher high, higher lows with a new range area. Then this guy here, this candle here, this very small candle, this green candle, it's not the whole area, it's just this candle itself. Was the major back then. Okay, meaning to say is the level and price range where price start to hold. Okay, until they start to break lah. Okay, so with this guy broken, okay, you know that this guy here somehow okay lah. The funny thing and also something important that you need to understand is when it's the same. If you have a resistance and they broke away, okay, you have a resistance, price start to break higher. This resistance here initially was a resistance. This guy here initially was a resistance. Oh, correct or not? Right. Initially they were a resistance over here. Okay. Price broke. Price reject. I mean retrace, reject. Then this guy here it will just flip to. It's not flip to a support. Okay. This thing y'all might remember. A resistance broke, not flip to support. A resistance broke already, price continue to stay higher. That level that they broke away, right, turn into a demand. Okay, potential demand is not a support yet. Why? Because price haven't test right? If price test, okay, then you know, oh yeah, price test and price continue to hold, yeah, you know it becomes a support. Otherwise, it's just a demand that okay, potentially people will start to buy that. Why? Because this was where they broke away and price continue to stay. Okay, so with this level that we identify, you know that it's a demand. Then subsequently over here, then we will know whether how price will react at this demand back then. Okay, which after that we have all these movements. Okay, we have fake out, go down, okay, price stick through, broke a bit, cover gap, price continue to stay higher, never go below anymore. Then that's it. You know that this guy here is still going to be there. Okay, so back to how you spot major and major and minor, right? Major is formed when a major level is broken. That one you need to remember. Major is formed when major level is broken. Already broken, broke and gone already, basically. Okay. If how you identify major, same thing, you need to have a base, you have a rally, you form another base first. Then you know that this guy never tap back, never come back, never do anything. Basically, it's a fresh level, it's not breach, nothing. Okay, it's just a level that is just gone. Okay, so similarly, we have this box area where it broke away from this guy previously. Okay, This was the last area they formed. This was the last point that they created before the drop. Price start to hold above. That's why you over here, you just track this guy. You know that this guy here will become your major. Okay, that's why I say it's simple to understand support and resistance, but very difficult to really go and drill down to the details. Because yeah, you there's a lot of lines I tell you just look at the chart, right? You can draw a lot of lines on because it's everywhere. But what is the important lines that you need to take note? Then also, what kind of trader are you? How long are you going to trade? As in, sorry, not how long you're going to trade. What's the holding period? Then that one also important. Because for swing, right? Let's say I swing, right? I see here, okay, maybe I can short here, even though this might not be my major over here, right? Or maybe it might not, because he haven't broke over higher, here broke lower, but this guy haven't broke anywhere. It's just in the middle or nowhere that they form from over here. Okay. Unless you drill even deeper, yes, then maybe we can find something over here. But I'm not going to do that lah. Okay. Then you will identify that, okay, you have one range over here. Okay, they broke down, they form another range. Okay, then they form another range. Then you have a lot of details, but in general, right, what you need to find is all these already hindsight already. Hindsight, we just need to know, okay, what happened back then? Okay, we take the general picture, okay, then we push to the now, what can we do? Understand? Right. But without all this, can I still draw a chart? I can just alternate I just look at this. It's the same idea one. I just need to know what is the level that was previously holding. Okay, here was the previous holding. They break down. Then after that, they form this area of supply which got rejected slightly. Then after that, this whole area here is going to be your demand one. Right? It's just that I go and fine tune to the latest guy. That's it. Can I still draw? I can. So it's up to you lah. It's how long what's your holding period lah? What kind of style you want to look for? Then then we can slowly try to cater to what you want to see. Okay, because like I say, I mainly I just do intraday. Okay, so a lot of my stuff is all price action, finding like these kind of levels. But why I don't look to previous to make any sense of it or to story tell you back then is because I think I see enough to know that okay, these are my levels. Even if I drag behind or drag anything, it will going to be in their range. Otherwise, here won't have rejection. Where is this rejection coming from? I don't need to know where they come from. I just need to know, okay, for me, intraday, I just going to be aware of this area here. I just going to play here. Okay, then if you want more clarity, okay, I just pull one more chart out lah. Okay, I just randomly give you some other chart lah. Can or not? Or am I too draggy already? Robin, understand or Robin? I keep talking, I don't know whether you all understand or not. Then I need to get some response. If you all understand, just tell me, okay, good. Or need to move to other topic, then I move. Because otherwise, Q&A, nothing, right? Then I will just keep talking. I'll just keep saying what I want to say. Okay. Okay lah. At least I hope that it value adds to you lah. Okay. Okay, Jane, okay. Can I will repeat again. Okay, for this major, minor, support, resistance, and all this. But unfortunately, for this whole webinar, I never do anything on supply and demand. Okay, like a slides. I mean, there's no structure to say for supply and demand. Okay, that one, if you all want, that one we need to arrange again lah. Okay, because this one the structure is basic, then we go indicator, then after that trading psychology. Okay, supply and demand is a whole new. It's not new. It's not a new thing on its own. Okay, but it's basically it's even more. It's like the foundation of the basic of TA lah. At least to me, at least that's how I look at it. Okay, because I need to understand like okay, what is supply and demand? Okay, basically people buying and selling, right? So who buy more, who buy less, I don't care because I just need to know whether to buy or sell. That's it. Then from there, I pinpoint my levels. Okay, so I think, okay, some still quite confused. Okay, I will just go through again with another chart. Then, yeah, let me just find something first. Xiong got any chart or not? Just throw me one. What? Any UK, US dollar? Apple. Okay. Xiong tell me Apple. Okay. Then we talk about Apple lah. Okay Apple. Oh, but the one Apple we keep talking about Apple already. Okay, TSM. I don't think I talked about TSM before lah. Have or not? Okay, you talk TSM. Okay, can I will just I will just show as the chart. Okay, so now the thing is right. I just want to just slightly reply to me lah. Okay, I just want to know you want to understand even more, or is it you want me to show you how I do? Because if I show you how I do that, I won't do all the story tell already lah. Story tell all this, I think. I mean, I still can do lah if you all want. But otherwise, if you want to just to know, if I sit down now, what will I do, right? Then I will just show based off what I going to do lah, basically. Have or not got any response? Just let me know lah. Want me to story tell one, or is it just straight up tell you what, like step by step lah, basically what you do now? Because story tell is basically to let you understand why some levels are major, some are minor, then why you need to think of that, why you don't need to think of that, stuff like that. Show you. Okay. Wait, wow. Wenjie good wow, Wenjie good. Okay. Wow. Thank you. Yes. What will I do? I will definitely just tell you what I do lah, right? I will just show you what I do now. Because technically story tell, nice to hear, but uh okay lah. I do step by step lah. Okay, I will just give a bit of context why, and after that I show you what I do. Okay. Okay, wait. Ivan, can we stay major, show more touches of S support and resistance zones? In a way, okay. In a way, yes. But the thing, important thing is right. You need to make sure that is the movement of this S and R zone, right? Let's say for example, okay, like over here. Here is a range, right? You agree, right, Ivan? Okay. You need to make sure that this area, right, came off a previous level that they broke. You get what I mean? Because previously they were holding this whole area, you know that support got tapped many times and price start to get out. Okay, then after that they start to form over here, right? Yeah, here is going to be your major also. Okay. Yeah, so it's not just based on the time they touch, is whether they can get out of the previous level. Okay, like over here what they broke lah, basically lah. So that's the story tell part lah. Is what they broke, then they create here. Okay. So if they can break something very strong, right? It's like, okay, I give you an example lah. I just make it very simple also. Like you have a wall in front of you. You need to break the wall. You keep punching the wall, cannot break. You take a sledgehammer, you try, also cannot. Then you think again, okay, I go use a car. Right? So you use the car. You accelerate, max, wow, got turbo, everything, bam, the wall break. Okay? Sorry, you cannot use car. Sorry, say wrong. That one is for volume. Okay, wait. You need to break the wall. Okay? You use a tank. Okay, the tank break the wall already, right? The wall broken already, right? Gone already, right? Is the tank still there? It's still there. Okay, this is what I want to say. Okay, it might not be the clearest or smartest way to explain it lah. Okay, but you just need to know that price is always trying to bang into a wall. Okay, so to break that wall, right, they need something more substantial lah, basically. Okay, then if the wall is very thin, right, you run, bam, the wall also gone ma. So that one is minor lor. Okay, the wall cannot break. Major lor. That's my way of understanding last time lah, like initial phase. I just think of it that way. Okay, like okay, price cannot go. Then I just see how much more do they need to get out of it. Okay, then you can identify whether like price itself is going to be a major or minor. Okay, so the story tell part is basically price. They basically continue lah. They have this market cycle, right? They have a range, they have a rally, they have a range, they rally, range, rally until here. Okay, then from here they start to break from this guy. So the point of break over here. Okay, over here. You see, when this area break, okay, I just give you the whole thing first. But otherwise, it's actually this whole top area where price never revisit anymore. Okay, until I don't know when yet. At this point, I won't know ma. Same story for over here. Okay. So when you drag out your area, subsequently they will make some sense. But some sense lah, because it's always a price range ma. Okay, when you have your resistance or your supply and demand, the area will always try to reject when they come back again. Okay, but you see the problem is now you have a major here. Here broke already. So what happened? When they broke, right, means they already showing you, okay, maybe eventually they want to try getting higher. Because on this day itself, you see they gap up and open. Okay, it may be for whatever reason, I don't know. Okay, they gap out and open, meaning to say a lot of people are jumping into the buy at the opening. For what reason? I have no idea. At this point, I don't know. I mean, now I look back, I also don't know. Okay. But the problem is, like I say, candlesticks are, okay, the closing of the candlesticks, right, will always be the most important because it's whether they are willing to hold it out, whether they want to leave it there to hold for the weekends or the day or whatever. Okay, so always take note of the closing candle. Okay, so you know that this guy is going to be your new guy. Okay, because why? They broke higher. Okay, yes, price still continue going down. But like I say, if you have two zones in the same guy, you just take the most right guy. Okay, then you basically you have it as of now, right? Then bottom is the same thing, lor. You broke lower, okay? Subsequently, price try to stay higher. The only zone that they have when price broke here, right? The next level is already far off already. It's over here already. Okay, so with that, you don't have anything at the bottom except for the lowest guy and over here. You get what I mean? Because all this data is all high side one. Already printed. I just come out and tell you story tell only. I just story tell to you what the chart was doing back then only. But then you just need to pinpoint where was the point where price never come back again, or the point where price rejected again. Because all these high side already, you don't need to actually how do I say it? How do I put it? Okay, you just need to find the area where price reject very strongly and never visit again, or they basically break already, never revisit again. Okay, it's just they cannot come back, price cannot come back. So that both that area itself, right, will become your major already. Okay, it's the same as all these levels over here. Okay, then the major supply and okay, sorry, this one is I'm talking about supply and demand. Okay, but for your support and resistance, right, your major, you just need to know that they need a lot more volume, a lot more energy, a lot more volume to push the price out of it. Okay, so it can be a very prolonged period, but prolonged is very subjective because if I'm looking at now, right, okay, maybe this thing 1 year, almost 2 years, right, 1 year plus, okay, is prolonged. But then if I zoom very far, right, maybe this thing is not prolonged already, this 1 year. Maybe other days you see last time got what 2 years, 3 years kind. So it's very subjective. So I don't like to use a time to tell you that, oh, you need to see at least 3 months, then it's major. No, it's not, it doesn't work that way. Major is when the price is created subsequently, right, can break the other major. That's your major. It's not because of time constraint. There's no time restriction in it. So I don't want to tell you, yeah, this one month, that's why it's not major. Yeah, but if that one can keep giving you all time high, then how? It's not that it's not pushing the price, right? Yeah, so yeah lah, this is the storyteller lah. But if I'm going to do it, right, what would I do, right? Like Wen Jie say, right, what would I do, right? Same lah, I already draw for you already, right? All I need to know is, okay, just nice, price already rejected my resistance. Why? Because we have a range, right? So initially was resistance, price finally broke and try to stay higher. Okay, so now I need to think of, okay, whether price come back here, can I do anything? But now I cannot because why? There's another minor. This is the minor now, okay? The minor that is might become a resistance. So what I want to wait for, I wait for a movement either they go up, come down, go up, or they can guide that. Okay, so it's zigzag. Sorry, I cannot draw the line, so I need to delete first. Yeah, but basically just like that, right? If I'm going to do this is how I'm going to do it. Right, but if you want storytell, then okay lah, there's a lot more stuff to it lah. But not everyone like the storytell part because if you don't understand, you also don't understand one. Yeah. Okay. All right. Wow. Good suggestion for Wenjie. Wait. Later I need to see. Can okay. Wait. I just look through the Q&A first. Okay. Jane, okay or not? Can understand. Ivan, can pivot points replace support and resistance level if you use PV which setting? Transition. Okay. Ivan, for pivot points, right? If you are talking about like FIBO retracements, right? Usually, I mean, FIBO, the general idea is, okay, you draw your levels, right? You find your swing low, you find your swing high. After that, you draw your FIBO, okay? This one is next week's content, right? But I just roughly just tell you. You FIBO, you find your swing low, you find your swing high, you draw out the area, you just find 0.618, target 1.618, right? That's the FIBO idea, You just find all these number, but But something interesting about Fibo, right, is all these numbers, I say real, I don't know why they reject at the number. Okay. I went to read through also, right? They all say they don't know why. It's just a magic number that it's just there. 0.618 and 1.618. Right. So can it replace SNR? Yes, Fibo is a nice way to use it, but my own concern, right, for myself is I always, you see, it's the same thing. If I depends on how far I stretch my chart as well, right? My pivot point will be very different. Of course, I can identify properly, okay, here is swing low, here is swing high, yes. But if I miss here or I zoom even more, I say, hey, here also swing low, here also swing high. So to me, there's too many, how do I call it? I feel that different